Royal Commission is now in session.
Mr. Gray.
Thank you, Commissioner. I call Dr. David Panter and Mr. Martin Warner.
Dr. Panter, do you solemnly and sincerely declare and affirm that the evidence you shall give will be the truth, the whole truth, and nothing but the truth? Please say, I do.
I do.
Mr. Warner, do you solemnly and sincerely declare and affirm that the evidence you shall give will be the truth, the whole truth, and nothing but the truth? Please say, I do.
I do.
Dr. Panter, you're the Chief Executive Officer of ECH, an aged care provider in South Australia, which specialises in providing aged care to people living in their own homes and in the community, not in residential aged care settings. That's correct, isn't it?
Yes, it is.
And incidentally, you also hold a role as Board Director of Leading Age Services Australia, one of the peaks, and you're Chair of the South Australian Council of Social Service. And prior to your role at ECH, you were Chief Executive of the Central Adelaide Local Health Network for 2 years and held numerous executive roles in SA Health between 2006 and 2012. And you're a qualified psychologist and your PhD is in developmental psychology. Is that correct, Dr. Panter?
It is, yeah.
Thank you. As for ECH, from origins in the care of war widows needing support in their later years, ECH is a non-denominational, not-for-profit aged care provider of affordable housing and innovative residential options, home care and centre-based services providing allied health, social activities and respite. Is that right?
It is, yes.
And Dr. Panter, you've appeared before the commissioners before. Thank you very much for appearing again. You've also prepared a witness statement which has in fact been tendered in the home care hearing held 3 weeks ago. I'll just give a reference. It's Exhibit 20-1, that's the general tender bundle for the home care hearing, at tab 69, RCD 9999 0347 0001. I'll just ask you to verify it, but we won't need to tender it. Can we have that document displayed on the screen, please? Operator, are you able to display Dr. Panter's witness statement, please? RCD 9999 0347 0001. Thank you. Dr. Panter, is that a copy of your most recent witness statement for the Royal Commission?
It is, yes.
Dated 30 June 2020. And to the best of your knowledge and belief, are the contents true and correct? And are the opinions in it opinions that you sincerely hold?
Absolutely, yes.
Thank you. I don't need to tender the document, but we verified it. Mr. Warner, you are the co-founder and CEO of Home Instead Senior Care, which you established with your wife, Sarah Warner, correct, sir?
Yes, that's correct.
Thank you. And Mr. Warner, you graduated with a Bachelor in Science from North London University and had a career in hospitality management and then began specialising in franchising, and you and your wife migrated from the UK to Australia in 1986. You have qualifications in institutional management and health services management, and you're a member of the Australian Institute of Company Directors. Is that
Yes.
correct, Mr. Warner?
Yes, that's correct.
Thank you. And Home Instead Senior Care was established in 2005 and it operates on a franchise model, is that right?
Yes, that's correct.
Is it correct to say that the operating model of Home Instead Senior Care is currently based on the home care package program predominantly?
No, it's we have private services, we have brokerage services, and we have home care packages. Yeah, there's a reasonably even spread through that.
Thank you.
In terms of the stream, so to speak.
Thank you. And in addition to home care package brokerage services and private services, do you have grants through direct agreements with the government under the CHSP program?
No, we don't.
Yep. And you
The
can't.
only funding we've received ever is home care packages.
Thank you. And Home Instead Senior Care currently has approximately 2,600 staff who provide care, known within the organisation as caregivers, and 39 offices around Australia. Is that right?
Yes.
Yes. Thank you, Mr. Warner. And you've prepared a witness statement for the Royal Commission, which was tendered at the home care hearing 3 weeks ago. It's Exhibit 20-1, tab 28, RCD 9999 0375 0001. Is that document displayed on the screen, the statement you've prepared for the Royal Commission, Mr. Warner?
Yes, it is. Yep.
Dated 15 July 2020. And Mr. Warner, are its contents, to the best of your knowledge and belief, true and correct? And are the opinions in it opinions you sincerely hold?
Absolutely.
Thank you. Now, Dr. Panta, Mr. Warner, have you a familiarity with the propositions for new service arrangements which the council assisting team proposed in the home care hearing 3 weeks ago? In particular, for service arrangements dividing services into 4 categories for the purposes of administration and funding?
Yes.
Yes, that's the draft council. It's the draft council proposed service. Yes.
I might just ask that document be displayed, Mr. Warner. It's Exhibit 20-1 in the home care hearing. It's tab 59 at page 2. And we'll just have that up on the screen. In essence, the service arrangements proposed following integration in due course. Perhaps, operator, if you could call out just the text beginning the types of services that older people, etc., to the end of those bullet points. Thanks very much. And if we expand that, people will be able to read it. After integration of CHSP and the home care package program, it was proposed for the purposes of the home care hearing, and these propositions were tested during that hearing, that there be 4 categories of services along the lines outlined here, that they be available through a single assessment process, adopting an enablement approach, that is an approach that prioritises enabling people to maintain their independence and avoid deterioration in their health and well-being, and that the home at care category, or the care at home category in the last bullet point you see on the screen would have an assessed domain for care management with a dedicated budget for care management, and that there be clearly defined care management roles and responsibilities. These points were all dealt with in more detailed propositions. The proposition dealing with that one was HC5. And that there be a reorientation of consumer-directed care towards shared care management, and that the transition to integrated arrangements would involve interim steps such as clearing the waiting list for home care packages and making available social supports through CHSP, and escalating the availability of those supports through CHSP so that people did not need to use their home care package to obtain those services. Now, can I seek the comments of each of you panellists on that broad proposal? I'll start with you, Dr. Panta. Do you regard that structure as appropriate?
I think that the structure has huge advantage in being structured in that way. I think one of the areas of concern that I would have goes back to that issue of care management. And whilst that's clearly articulated in the care at home element and given due recognition, which I absolutely support, I would want to ensure that there isn't a complete separation between people embarking on a support journey in those other categories around social support, the assistive technology and home modifications, respite care, that their journey needs care management from the beginning. It's the frustration that certainly my organisation has with CHSP services, is that many of those people do need some sort of care management to make full use of CHSP before they eventually migrate into a home care package. But because that care coordination, care management is not part of CHSP, then they miss out. And so for me, it's about how you connect those earlier interactions, albeit that they might be funded more effectively and efficiently through a block funding arrangement, but how you make sure that they don't lose sight of that care management need within those lower levels of care. Because in our experience, if you don't have some of that, you escalate too quickly into the need for a home care package.
Dr. Panda, in your witness statement, you raised your concerns about care management being underdone in various ways in the current system for providing services for people who need aged care and are not in residential aged care settings. You made that point about CHSP not having care management, and you say it should, and it should be restored. You also make a point about the home care package program not succeeding very well in its provision of care management. And you made a point about some analysis by Stuart Brown of home care provider survey data. Could I just ask you to expand on that latter point? I'll ask the operator to bring up Exhibit 20-1, tab 4, the Stuart Brown analysis. We'll go to page 0047 at table 28 and chart 16. I'm not certain that this is the data that you had in mind, and I'd just be interested to seek your views, Dr. Panda. Is this, firstly, is this table and this chart what you had in mind when you spoke about?
Yeah, it is, in the sense that it's in relation to if you look at the chart and you see the reduction in hours dedicated to care management going down against the levels, whereas our experience is that level 4 packages, because of the degree of complexity of care and the need being met, you actually need a higher degree of care management to ensure that you're maximising that reablement approach and keeping people for as long as possible as they wish to, remaining independently at home. And that's an area that we have focused on, particularly at ECH, because we believe very strongly that the majority of people do wish to stay at home for absolutely as long as possible, and indeed potentially die at home. And so we have found, by having a higher degree of care management, utilising more specialists, for example, clinical nurse consultants, we now also have our own in-house GP service that provides consultation and liaison to hospital specialists, such as geriatricians, in order to make sure that we are checking and reassessing somebody's changing needs to enable them to then have the care being provided change to match that need. So that was my observation on that chart, is that I would expect on our evidence more hours going towards care management, the higher level of the package, because of the higher complexity of needs being addressed.
Yes. The only explanation that occurred to me when I read other parts of the report was that the average unit price being charged for care management as one goes up the packages, up the levels of package, seems to increase, and it's highest for level 4. I don't know whether you have any ideas as to what is causing this, in effect, counterintuitive decline in hours spent on care management as complexity increases. And do you have any immediate ideas about what could be done by way of solution?
I think the critical issue for me is about wanting to assure that the care management is seen as a valued element of the package, and that's valued at every level in terms of the regulation, for example, that for the Safety and Quality Commission to be focusing on the quality of the care management and whether that is actually delivering the value for the client as intended. And I certainly am aware from my discussions with other providers that there seems to be huge variability in understanding what care management is and certainly what good quality care management actually looks like, and the degree that you need to potentially go to ensure that somebody is getting the best possible out of their package to help them continue to live at home longer. So for me, I mean, my initial interpretation of this data was almost, well, whether or not people are operating on the basis that by the time you get to level 4, it's almost inevitable you're going to be going to residential, and we take the sort of foot off the pedal, so to speak, in terms of the care management. Whereas in our experience, that's when you need to increase it. And we're trying to track our performance and ability. And it's a bit difficult to interpret some of the data because of what's available nationally. But from what we can see, we think that around about 45% of people in a home care package migrate to residential nationally. And our equivalent figure, because of what we believe is a heightened focus on that care management, is actually 15%. 15%. And what we're seeing...
Yeah. We'll leave it there. I'll take you up on that point about the potential for outcomes-based funding a little later in the examination, but thank you, Dr. Panda. Mr. Warner, and operator, we can take those graphs down now, thank you. Mr. Warner, can I go back to the broad structure outlined in the outline of new proposed service arrangements for home and community aged care? And I'd be very interested in the perspective you bring as a specialist provider of, to the extent that you're getting Commonwealth subsidy, home care package services, and what your views are about this broad structure, please.
I'm supportive of it. My position all along has been the fact that I'd like to see the CHSP and the home care packages combined into one system. And it is a natural continuum from very low level care, so to speak, right the way through to high level care, and also with the opportunity to bring in another level, of course, which would be something along the lines of, kind of like a level 5. So I'm very supportive of this. All these aspects are exactly what we experience right now in care at home for a home care package. There are people who want social support, there are people who want personal care, there are people who need assistive technology and so on. So I support this, the types of services that you put forward there. I think as well that when it comes to the care management, do you want me to comment on that?
Yes,
my perspective? Yeah, when it comes to the care management, our experience is very clearly that at the lower level, there's a smaller degree of care management required to help clients manage their package and get the services they want. And without doubt, in our business, as you go to level 4, it's much higher. So that's the first time I've seen that graph, so that came as a little bit of a surprise to me, because it certainly isn't our experience, far from it. So I wasn't quite sure what the numbers related to, but it's the first time I've seen it, so it's a bit hard to comment on it. But it just went, less hours? It doesn't seem to make sense to me.
Mm-hmm. Yes, it seems to be saying less hours, not necessarily less cost, because there could be higher unit rates because of greater clinical expertise on the part of the care manager for high levels of complexity, but certainly less hours, yes.
Yes,
less hours,
yes.
less hours as a percentage of overall care provided.
Okay.
Yeah, the difference, isn't it, I think, that we're talking about a larger base figure at the higher level. So it may not be less actual money on coordination, but proportionately, more funding may well be going to the delivery of the support services. So I think we've got to be very careful how we interpret these data.
Yeah.
Okay.
We'll go to the next point, which is propositions in the funding and finance hearing, this current hearing, which have been advanced and tested. And these are in tab 111 of the general tender bundle for this hearing. And I'll ask the operator to please display FF1. FF1 is a proposal for independent cost review and pricing by an aged care pricing authority. And Dr. Panda, you've mentioned a number of things in your statement about the absence of an empirical underpinning for the levels of home care funding, both in the CHSP context and the home care package context, referable to any measurement of the need for and cost of high quality aged care. Is this proposal for independent pricing the solution, or at least part of the solution, Dr. Panta? Do you support this proposition?
Yes, I do support it. I think it is part of the solution. I think to have a independent body that's looking at exactly what the cost and therefore reasonable price structure should be, it is absolutely appropriate. And is consistent with what you see elsewhere in sort of health and ageing. I know that comparisons have been made, for example, to the Independent Hospital Pricing Authority, etc. So I think I do see that having this sort of independent body that can oversee that process and do that degree of examination would be very helpful.
Yeah. And you say in your statement, this is at paragraph 9 on page 3, that aged care providers are not adequately funded to provide high quality care or quality care, with the biggest issue being a lack of understanding of the cost of providing high quality care services, and that there's been no significant change in funding levels in home care. Do you see a need for interim measures while an independent pricing mechanism is established, given that on the current evidence before the Royal Commissioners, we're looking at a timeline of at least 18 months and possibly longer in order to achieve that capability?
I think there needs to be some sort of interim arrangement, because at the end of the day, the current funding both for CHSP and for home care packages, essentially those dollars buy less now than they did when the original sums were conceived. And so with CHSP, for example, and again, I've talked about this in my witness statement, we've ended up with a rollover of existing deeds. And for us, that's around about $6.5 to $7 million worth of service. But that amount of money hasn't changed now for 7 years, and it's been rolled over for another 2 years. And so it inevitably buys less hours of service, because there are various increasing costs to do with keeping pace with salaries, etc., that have to be accommodated. So the net effect is that that amount of money buys less hours, and each year we go through an acquittal process with the Department of Health to justify, and I have to say that's always then accepted, that we're going to have less hours. But it does mean that overall there is less support for older people. And it's the same within home care packages. If you look at what has happened over many years now, then there's been an increase for the government version of CPI, but nothing else. And therefore, over 10 years, the dollar value in terms of how many hours of care it can potentially buy does reduce. And that, again, has an impact on the ability for somebody to carry on living independently at home.
Pending integration of the two separate programs that currently exist, the two main programs, CHSP and Home Care Package, and B, pending establishment of the capability to perform independent cost reviews and set prices independently of executive government, what's to be done in the interim? Can I ask you about this? The system's currently capped on a per capita basis as regards the packages that are available, and it's also in a sense capped, is it not, under the CHSP program, although there doesn't seem to be a central repository of the information about how many people need CHSP services but aren't receiving them, because that's really a matter of trying to tally all those acquittals of the kind you just mentioned. Is that a fair summary of the situation? And if so, does an interim solution involve removing those restrictions or relaxing those restrictions?
I think it does require a relaxation. Particularly, the CHSP is also distorted because of how many people are receiving more hours of CHSP because they're waiting for their right level of home care package. So, that has a consequence of silting up the CHSP system that was already under stress. And certainly we can see from our perspective that there are people who need the sorts of services that CHSP was originally intended for, that lower level, early entry, who are just not getting it. If you look for South Australia today, at most portals within MAC for CHSP, most providers have got them closed because they're completely full and can't offer any additional service. With regard to the home care package one, I do think there's an interim arrangement that potentially is, even if it was just to look at what could be drawn from the ACFI experience, because again, as I've spoken about elsewhere in my evidence, when we ran our trial to see what we could actually support in terms of complexity of care in people's homes and what that cost a year or so ago, we went through a process of taking people who were essentially on a level 4 package and assessing their need using the ACFI formula for their care component had they been going into residential aged care. And what that showed on occasions is potentially up to $60 more per day for their care if they'd been in residential compared to being at home. And we, using our benevolent funds, topped up their package if necessary.
I'll just ask the operator to display page 0005 of your statement, just under paragraph 12, where you refer to this study.
Yep. Because in that piece of work, as I say, we were able to demonstrate that we could keep people at home with high degrees of complexity much longer, and indeed in some cases until the point of death in their home, which was their choice, simply by taking, as I say, that ACFI funding formula and applying it to home care, obviously eliminating the accommodation costs because their accommodation is already met, they're in their own home, but just looking at the care component. And so I would argue that even in the interim, there could be some work done to look at how that assessment process for the care component could be addressed. And as Mr. Warner's already indicated, and again, I've got in this element you've got on the screen at the moment, this is not necessarily out of line with what David Tune was recommending some 2 years ago now about the introduction of a level 5 home care package. But it's taking that ACFI funding formula that's already there, but allowing it to be used for people receiving their care at home for that care component.
Thank you, Dr. Panda. Mr. Warner, at paragraph 17 of your statement, you also give support to the notion of an additional level of funding for example, an HCP level 5, and you've furnished case studies to the Royal Commission in which, in at least one of which, there's actually an example of how by supplementing the costs of home care from private sources, the family was able to bring a person, in effect, back from residential care and keep them at home. And so that's a concrete illustration of the point you're making. Can I ask you about your general views about adequacy of funding in the home care package space, because that's the area where you're operating? There's a bit of a conundrum here, isn't there? Because there's an underspend on average of home care packages by something like $8,000 per person, I believe. Quite an enormous amount of accumulated unspent funding already exists on the books of something around $1 billion worth of unspent funding, we believe. So how to reconcile these points, and what's your view about the adequacy of funding in the home care package space?
I found that actually a really interesting and challenging question about is the industry adequately funded, because it's typically response is about, no, we need more money, we need more money. And I thought, let's focus upon what's happening in our space, in our business. And that was exactly that, which is that we had a lot of unspent funds sitting in our bank accounts, which we don't want, and that it was really that the whole package wasn't being used. So it's hard to say for me that the industry isn't adequately funded when there is a significant amount of money sitting in the bank not being spent. So that was the basis upon which I said, no, I think there is adequate funding as it sits for those people who have been given the funds. I wasn't thinking of a much broader outlook on whether CHSP is funded adequately and so on and so forth. However, so I said that I think it's adequately funded, but that there is a complexity here. And the issue is that there is a problem of moving from one level of care to another level of care. And so, for example, from 2 to 3, whatever, it's a very time-consuming process. And that is part of the problem, which is that what we should be able to certainly, in that sense, it's not adequately funded. Or even when you get to a level 4 and you get to a point where you need more funds, which is the reason why I said we need a level 5. So I think it's the flexibility of the system to fund, which to me seemed to be more important than the quantum amount. That's why I read it. Yep.
Is now a good time to ask you about your care recipient deposit concept? Because although perhaps that doesn't directly go to the point of whether the levels of the home care packages are adequate, it's really raising another funding adequacy point, isn't it? And could you explain why you believe that's necessary and what it would be?
Yes, I think the questions that the Commission asked us were about what are those, could be areas where there needs to be a more effective way of funding, or there are challenges in controlling costs and so on. And I put it down to 3 areas, and one of those was in terms of cash flow, because if you're starting with a client, then there's certainly a period of time where you have to work with that client. First of all, for them to become a client or care recipient. So you have to meet up with them and so on and so forth. And then you also have to explain the services. So the issue here is the time from which you get an initial inquiry from a potential care recipient right the way through to when you actually start services. Now, in the private model, that could be very quick indeed. That can be just a couple of days. But in the government system, for a whole range of good reasons, it's a much longer process. But we've got right now, for example, helping people understand, they say they've been assessed or they're getting an assessment or whatever it may be, but they don't even actually understand whether it's for a CHSP or whether it is for a home care package. And I can give you a really good example there, which actually was about my mother, which was when I contacted my aged care about that. Somebody came around eventually, and I actually attended that. And we'd asked for a home care package. Most definitely, that's what we wanted. When that person came around, they were sitting there with my mother and myself. What was happening was it quickly became obvious to me that this person wasn't from ACAT. They were from RAS. They had come to assess for a CHSP, which was clearly not what we asked for and clearly not what she was appropriate for her. She had very much a high-level need. So that was an example of one step in the process. The next steps, of course, move on to that when they have been assessed, we have to spend time with them going through what level they're on, what kind of services we're requiring. We've got to get a budget together. We've got to take them through the age quality system standards. We have to sort out their individual funding that they may have to have an income test for, and a whole range of things. So that in itself is a long process, and it usually involves a number of visits backwards and forwards to a client. So there's a degree of complexity in that. So by the time you've got all this work through, and then you start the services, and by the way, you then get your money 4 weeks after you started services, typically. That's a long period of time. What we do in our private services is we say to a client, look, we get this all in place, but you will pay a deposit, and that's typically 2 weeks deposit. And what that is about is assisting with cash flow, and it's also gaining a commitment from that client. They can move off that private service overnight if they want. There's no penalty. But it's really about gaining the commitment and also providing some of the support for cash flow. What I'm suggesting to the Commission is that what happens is that with that service, that the Commission or the government, should I say, the government pay a deposit to that provider. That deposit would perhaps last, say, up to 6 months to enable that to cover the cash flow. Thereafter, it's offset against ongoing fees. It's a very simple process just to enable cash flow to not to become a massive issue. And in a growing industry, cash flow can become a very large issue. So it's a support from the government. It's a bit of a win-win, I think.
You make a number of other recommendations. These are all on page 0005 for improving administrative processes. Just to briefly summarise, you say the way the monthly statements are required to be prepared is not logical and doesn't enable providers to use standard accounting software, and that should be addressed, correct?
Yes, the way it's worked is that we provide a statement to the client or care recipient based on what income they should have received under their package, and we balance that against what has actually been spent on their package. It's just that simple software solutions don't talk about what should have happened. They talk about what money did actually be expended and what money was received. And so it doesn't match up, and it means that there's a lot of workarounds to make that happen. You have income, you have expenditure, which is reality. And what we're dealing with is an amount that comes in for which half of it goes into unspent funds, and we're trying to reconcile it all. It's just a complicated process. If it was just worked on normal accounting statements, it'd be simple. It's just one small but painful example of how administrative processes could be improved.
And you make a number of recommendations when it comes to user contributions and means testing. You say the form, which is a combined form for both residential and home care, is incredibly burdensome and can run to 100 pages. And the Royal Commissions have heard some evidence from Mr. Costello about this. And furthermore, you raise a recommendation, or you raise a point to the effect that the government should be in effect the custodian of user contributions. At present, we understand that providers are the recipients of user contributions, and they have a discretion to waive them, and there are marketing practices and the like whereby user contributions are waived by particular providers. Your proposal to have government receive those contributions would in effect iron that out or preclude that practice and establish uniformity of the user contributions practices through the home care segment. Is that a fair summary, Mr. Ward?
Yes, what I'm trying to achieve here is that we have the providers are here to provide care management and deliver the services, but essentially the funding all remains with the government. And we're here to create statements, we're here to collect money and so on and so forth on behalf of the government and then send it back to the government. I think the thinking here is to try and say, well, look, if this was moving towards where we provide, pay for the service, or we invoice the government for services after they've been delivered, which is the movement towards arrears payment, then the whole financial or reconciliation and the statement for the client can just simply sit with the government, because they would know what the incontested fee is that they have to pay. They would know what services have been delivered, because we will send them an invoice in arrears. So the whole reconciliation can simply sit with the government, and they would then also be holding on to the unspent funds. They would have the details of that. They can collectively see the quantum of unspent funds and how they can then choose to manage those unspent funds. And one simple, perhaps naive suggestion here is that, that will maybe enable all those unspent funds to free up and speed up the process of people moving from one level of care to another. So it's really better use of those funds, because honestly, they're no use to the providers sitting in the bank account. They really aren't. They just have to go into a separate account, and it's not no great value for it.
Can we go to the co-contributions regime that the council team are proposing in this hearing? It begins, this is tab 111, the operator will display it at page 0009, beginning at proposition FF13. You'll see there's a structure here, Mr. Warner, for a vastly simplified regime of contributions. In effect, the design concept is that there be a modest price signalling fee that people will pay, subject to a safety net, so that if they really cannot pay, there will be a safety net. But there'll be a relatively modest price signalling fee to encourage prudence in the expenditure of the person's package of subsidy, because they have some skin in the game, and that will also encourage consumer engagement in the services that they're being provided, because of the axiom that if you have to pay for something, you take a greater interest in it than if you don't. Now, the proposal here is for social supports, $5 a service, or perhaps a percentage, might be easier to manage, of actual services incurred or received. So actual expenditure, and could be 5, could be 10%. A similar contribution, this is at 14 for assistive technology and home modifications. A similar contribution for care at home, that's FF16, and no fee for respite, because of the significant interest that society has in ensuring that informal carers get the respite they need without any impost being necessarily justified on them. Now, what are your views about this structure for user contributions?
My view is that in principle, I believe people should, if they're able to, should make a contribution. The current process we have right now is quite complicated, because there's an incontested fee and it has to be changed, and we have to go back and change all our administration to support that. So that's a complicated way. The one you put forward here, which is there is no means testing, but people overall will have to make a contribution to it, is a simpler method. I think in terms of how that money is collected, for such small amounts of $5, is an administrative consideration. Maybe that is through a direct debit system, so to speak, which can be set up with care recipients. Or alternatively, I think an even more desirable scenario would be that would be a direct link from the client's funds somehow through to the government holding the statement and managing that whole transaction process. But in principle, I think people should make a contribution to that. And I noticed you put in there about the hardship provision, so people who can't do that for hardship, that sounds reasonable to me. It's a small amount, yeah, but I don't know how that ends up in total quantum for the government, but that's my principal position, yeah.
Thanks, Mr. Warner. Dr. Panther, in your statement, you've expressed some concern about certainly the current user contributions arrangements. One of the things you said, this was on pages 3 and 4, was that very few pensioners can make the contributions they're currently required to make of the daily fee for home care package services, which is calculated at 17% of their pension without compromising some aspect of their quality of life. What are your views about this alternative, vastly simplified structure, which has a hardship safety net, but otherwise no means testing?
I think it is a sensible solution. I agree with what Mr. Warner has said about the administrative costs of trying to put in place the system. And it's probably worth also highlighting that in the data that I provided here that's on the screen, then that 65% that were not paying the full co-payment, they were making that nominal, and it was between $1 and $5. And one of the drivers for that was the fact that even when people were struggling to live on their basic pension, they felt guilty if they weren't making some sort of contribution when there was an expectation that they would make a contribution. And so certainly people wanted to feel that they were doing the right thing. It was about 25%, 24% that were making no co-payment simply because they just could not afford it. But 65% were making between 1 and 5, with only the remainder paying the full co-payment. But as a consequence of our experience, we have decided in our current pricing round to remove the co-payment because it was becoming increasingly a cost burden trying to collect the co-payment for those who were making the full co-payment. And at the end of the day, it was costing more than was coming in to administrate it. And so that's why we made the decision this year in our pricing restructure to forego the co-payment. It was purely that function.
Thank you. Should the function of collection be on government rather than all the providers?
I think if it was, I think it needs to be a simple process. If it could be linked to the pension itself, then that's one possibility. But then, not everybody will be having a government pension as such. So there needs to be a simple way of collecting these funds and for them being accounted for. Even more so at that nominal level, because again, there is likely to be a high cost associated with administering that co-payment. The other challenge is which is worth commenting on. We're probably at a tipping point. I think we've now reached it within ECH, but we did have an initial barrier to moving away from cash for those co-payments. People were very reluctant to do it electronically for a whole variety of reasons, but we have seen, and it's one of those positive consequences of the COVID-19 experience, that that's been the shift, even for those people who are very reluctant to go to electronic for any sort of payment type systems, and now have moved towards that.
Thank you. Operator, we'll go to FF6, please, in tab 111. This is the proposal for a funding mechanism based on individualised bundles, and it's predominantly the thinking of the team, the current thinking of the team, that this would apply to care at home, that category of services we mentioned a short time ago. And I'll start with you, Dr. Panther. What's your view about this proposal as an appropriate approach to determining the entitlements of people assessed as needing care at home services?
Again, I think it's a step in the right direction. I sort of read into this sort of the potential for sort of case mix type analysis sitting behind this in terms of how the bundles are constructed. Certainly, part of my analysis of the underspends with the existing system is to do with the crudeness of those 4 levels. And if somebody's need falls just above the value of a level 3, there's nothing more to be done than to give them a level 4. So you're automatically potentially working with an underspend from day 1 because it doesn't match their required need at that point. So having some bundling and funding linked to that, which is linked back to needs and the ability to fluctuate up and down in the course of somebody's journey, would make it, I think, a more appropriate and equitable service that's being provided.
Thank you. Mr. Warner?
Look, in principle, I completely agree with this. I think that's I think it's about a workably competitive market as well. Where there is market failure, I can understand that that may not work necessarily the same way, but I completely agree with it. It's, yeah, nothing more to add. It's just, I think, appropriate. Yeah.
Yep. The corollary proposition I should take you straight to is something you've already touched on, Dr. Panther, and it relates to that study you did with the 12 residents who were in ECH's care, whereby ECH topped up from its own funds approximately $60 a day to achieve funding parity with a notional ACFI level of care component funding for those people. It's FF8, which proposes that for people wishing to remain at home, funding should be available up to the level of the funding they would receive if assessed for residential care. And I assume, Dr. Panther, you'd be in support of this. It's really on all fours with what you said in your statement and what you said a minute ago. Am I right?
Absolutely. Yeah. No, and I think we've now got ample evidence from our own experience about what is possible to support in terms of people staying at home, as I say, until death.
Yep. And Mr. Warner?
Like I read what David had put, and I agree with him that the exercise that the sample that they went through and were able to keep people at home was great. I really liked it. And I think it should be topped up to that another level. Yeah.
Yep.
So I think it's a good benchmark.
Yep. Can we go to assessment? Again, there may not be too much need to spend long on this. We have developed different propositions or put forward different propositions on assessment. We had a proposition in the home care hearing. We've got a more comprehensive set of principles for assessment in this hearing at FF11. I think I did advert to the home care hearing proposition about assessment. I'll just say at this point of the transcript that it was to orient the assessment process in favour of an enablement approach, as I mentioned a moment ago. FF11 is more comprehensive. There have been some augmentations of this principle suggested by other witnesses in the hearing. There's a lot of text which appears under FF11. I don't know if you have it available to you, but perhaps, operator, if you could just expand out so that we can see the principles A through to F. Now, thank you. Mr. Warner, I'll start with you. What's your reaction to this set of principles to guide assessment of need? The overriding design purpose here being that we have one avenue of assessment. A person can, in effect, have all their needs for aged care assessed through one process, And from their perspective, it's really a seamless exercise as to how those needs are met. There might be some complexity behind the scenes in different funding arrangements applying to enable the supply of those services, but the person should receive a seamless experience. Are these principles the right principles for that assessment, Mr. Warner?
I believe so. One of the things I put was that we need to have, in a sense, like one system, one program, one assessment process, and so on. So I think that's a really, really strong move in the right direction here. I liked about this was about the reassessment, which needs to happen more frequently. The area I think which may be challenging is that if we have a whole range of different assessment is based upon what people's needs precisely are. If you're thinking of moving away from having, for example, 5 levels of funding to very specific personalised funding levels, then that might be a bit of a challenge as to whether someone should receive $11,000 a year and someone should receive $11,280 a year. You know, it starts getting quite complicated as to how that's done. I would find that quite challenging for the assessor. But the principles here are exactly what I would like to see. I completely support them.
Thank you, Mr. Warner. We might come back to that point about the various gradations in funding that might flow from an assessment process of the kind identified in this proposition in just a minute, because there have been various iterations proposed about how exactly assessment should occur and how it might intersect with individualised budgeting, a form of classified or case mix informed budgeting, and how that might flow to funding mechanisms. And I do wish to ask you both about some detail on those various iterative proposals in a minute. I'll just go to Dr. Panta though now on the basic principles for the single assessment process, the single but scalable assessment process. Dr. Panta, your views?
Again, supportive of having that single assessment process. I think the critical features are the trigger for reassessment and the evidence required for that. And I would, because currently, I'd say, we feel very frustrated on behalf of our clients when we can see that their needs have changed significantly. We're trying to get a reassessment, and basically, 9 times out of 10, the message back from the current RAS ACAT systems is, unless that person is already overspending on the budget for their current level, don't even consider getting a reassessment, which is ridiculous, because we're trying to be timely and prevent decline rather than waiting for decline to actually happen. So I think it's the fluidity of the assessment system, how we ensure that you can get timely reassessment, and what is the evidence on which that reassessment is taking place.
Dr. Panta, what should be the involvement of the provider in any reassessment process? We've heard some views quite strongly expressed about the need for assessment to be independent of the provider by way of a check and balance on the flow of public monies, but we've heard other views about the importance of the provider's perspective. After all, the provider is the one who knows the care recipient best. What are your views?
I mean, I think for me, this is the iteration between the assessment process and the ongoing care management. For us, when I'm talking my statement about active care management, we go through a process where we're collecting intelligence on a care recipient, both directly from them, but observations of our staff who are going into that person's home, observations of family members, using technology where appropriate to gather intelligence. And that information feeds into, in some cases, daily, in others, weekly huddles of our senior care management staff in order to make some determination about what's happening to an individual and whether their services need to be upped or down, altered, etc., etc. That to me provides very good evidence that could feed into that reassessment process provided by an independent assessor. I don't think it is necessarily a good thing for the provider to do the formal assessment, but they should be in a position to provide evidence into that assessment process. Because as you say, they have got that better relationship on a day-to-day basis with the care recipient.
And Mr. Warner, your view on that?
I agree with that. Yeah, no, I agree with that. I think the authority or independence needs to lie with the assessing authority, but the knowledge lies. A lot of the knowledge lies with the provider, so they need to have input into that. I like the fact that it is independent, but there must be, in terms of authority, but there needs to be input from the provider who intimately knows the client.
Thank you. Payment in arrears and acquittal in the home and community care setting.
Just before you go to that,
Yes, Commissioner.
Mr. Gray, keeping on that the other proposal for a moment. What about the process the other way around, namely that the provider does the initial assessment as selected by the person, but with a subsequent evaluation of that by an independent body? Does that have merit? And if it does, which of the two would be better?
Can I comment on that?
Please, Mr. Warner.
My view on that would be that that is a feasible, absolutely feasible way of handling that assessment. I think the point I was trying to make is that the authority, at the end of the day, the authority needs to lie with an independent body as opposed to the provider. But it's perhaps and I think the provider would need to, in a sense, justify to an assessor that I think Mr. Panther raises a reason why you want to have this assessment take place. So there's got to be a bit of homework done by the provider anyway to put the case forward, so to speak. So it would perhaps, in a sense, kill two birds with one stone by putting the authority with, not the authority, but putting the initiative with the provider, and then the decision is made by the assessor.
Yeah. It's really just a question in my mind of which comes first. I can't help thinking that if it was me, I'd prefer to go to somebody who I think was likely to do the provision and be sure that I had negotiated with them what I was going to get and that they could provide it. Although I would then want somebody else to have the final say so that the person doing the provision wasn't directing me down a path that really was in that person's best interest rather than mine. Mr. Painter, do you want to comment on that?
Yes, I mean, I think it has to have that check and balance. I think it can work in that way. And indeed, some of the frustration often experienced by care recipients is that a provider, when they're taking on an individual who's come to them having been through the assessment process, often has to reassess themselves anyway in order to fine-tune the proposed care plan, etc., etc. So there is potential. And I was dealing with a client the other day who was complaining, quite rightly, that they'd gone essentially through the same assessment process about 3 times within the course of 10 days because of the way in which the RAS and ourselves had coordinated around somebody's particular needs. So I think assessment itself can be frustrating and it needs to be straightforward. So, but you do need that check and balance, but it could be, as I say, the independent assessment first that goes in, or as you've indicated, how that's then picked up in terms of the evaluation of the provider and the validation of the assessment in order to ensure that the client's not being driven down a particular path and public monies are being used appropriately.
And do either of you have any sense of the extent to which there might be more or less mismatch between assessment and provision if you had the provider do the first assessment or the evaluator do the first assessment? Do you see what I mean?
Yes, I certainly from my perspective, I would. It depends upon the quality of the assessors. What we've found is that, and hence why we always need to do some sort of reassessment when somebody joins our service, is because our assessments are done by current active practitioners, and often the assessors in the RAS are people who are not necessarily current in their practice in terms of making of the delivery of services, which does have an impact on the way you might assess somebody.
Mr. Warner?
I think that I think your proposal is a far more consumer-friendly proposal, for want of a better way of putting it, to start with the provider. But I think you still just need to keep that independence overall. But I think it's a good way to go.
Thank you. Sorry.
Yeah, no, if I could pick up on it, this is clearly an issue that is quite vexing for us as we think through these details. And I've been struck by the evidence that we've received from the Commonwealth around the problems they had with the ACFI arrangements. So in those cases, providers can in fact assess, and that pushes up the absolute costs. And what then appears to have occurred is that the Commonwealth had a knee-jerk reaction and froze indexation, and so it went on. So it seems to me that there's a need to find a route through here which avoids knee-jerk reactions, has proper costing or pricing according to costs, but also a level of independence and trust in both the assessments and the process for reassessing as we go forward. Would you care to comment on those things to give us both a bit of a flavour of that, please?
I listened to the hearing that you're referring to, which kind of surprised me because I wasn't aware of that sort of situation arising. So I think from a government point of view, I'd want to ensure that there is things have been handled prudently and appropriately. But the reality is that the provider is very close to that client. The provider can have a lot of input. But someone has to make a decision at the end of the day about what that amount of, what that assessment should come in at and what that value should be. And so I think it is a shared process, but ultimately it has to be with, I think, the assessor to make that call. That's the way I would see it. I think you do need to avoid those circumstances you've spoken about for residential care.
I would agree. I think that we need to make sure we have a system that recognises that there's always going to be a spread of providers in terms of their performance. We'll never be in an ideal position where every provider is excellent and is driven by the right values, etc., etc. So we have to make sure the system is designed, acknowledging that there is potentially going to be poor performers or poor performance. And so this is exactly your point, Commissioner. I think that the ability of providers to distort an assessment process has to be there as a possibility, and therefore how do you mitigate against that? And therefore having that separation and some independence, whether it's at the beginning or as part of the evaluation and validation process, to my mind, is absolutely essential.
Thank you both. It's quite helpful.
Thank you, Commissioners. Dr. Panda, Mr. Warner, I'll go now to the topic of payment in arrears and acquittal, and I'll just make a brief statement and see if you agree with it. The government has flagged and has prepared legislation to move the process of funds administration in the home care package program to an arrears-based payment system in a way that will look after acquittal. acquittal being proof of expenditure of a particular subsidy for a particular purpose, well, payment in arrears will necessarily only occur once there's been payment for a purpose that reflects the assessment of need of the particular person. Is that a fair summary?
Yes, yes.
And Mr. Warner, you've raised some cash flow issues about the transition to payment in arrears and perhaps the mechanics of payment in arrears once it's up and running. Your deposit proposal would cover some of the points that you've raised about the long delay after so-called onboarding or the commencement of the process of assessing and commencing services for a particular care recipient. It's also been suggested that accruals-based accounting might cover some of the cash flow problems. That is, once a provider incurs a liability to pay a particular expense, that should be sufficient for it to be able to claim payment under the payment administration system for home care packages. And if that were the case, there'd be a far less acute cash flow problem presented, because payment might be received shortly after incurring of the liability to make the expenditure and before the cash actually leaves the provider's account. What do you say about that?
Just trying to get my head around that concept. I'm not an accountant, but I'm familiar with the kind of systems they have. It seems to me, though, that we don't incur that expense until it's taken place. And so we don't account for that taking place. For us, it's, basically twice a month. So we don't account for it until then. So unless we just sent that account in every time we incurred it, then the government wouldn't know what they have to pay us. So I just can't quite, perhaps I'm misunderstanding something here, but it just seems to me that we share that money, that information, expenditure with the government through an invoice. But if they don't pay us that invoice, until we've been able to give them the invoice, then we've got basically a month's cash, which we would have paid out to staff before they can get it to us. Because they don't know how much the amount's going to be anyway. The government won't know how much it's going to cost them during that month until we send them the invoice. So I'm just struggling with the concept here, sorry.
Yeah.
Mr. Warner, I think you've actually got the concept quite well. The question is whether the invoice is sufficient. So accruals accounting means that, and indeed, although obviously it's not an exercise in whether you're doing your tax returns the right way or not, but almost all of the providers would probably need to account on an accruals basis rather than a cash basis. It's reasonably rare for cash accounting to take place. So the invoice, when you have it, is an invoice to be paid, and the evidence that there's an amount to which you're entitled to get back. My issue really is a slightly different one, and that is, so in a theoretic world, accruals accounting produces a perfect matching in an ideal world. It produces a perfect matching because you've got the invoice, so you now have a liability to pay, and you send the invoice to the person that's going to reimburse you so that they have an obligation to refund you. So in a perfect world, you've got a match, and the timing is, in theory, completely matched. The reality, though, probably is there will still be a lag between you having the invoice and having to pay it and the refund. So I suspect that the providers will still be out of pocket for a period of time. What I don't have a sense of is whether you're going to be out of pocket for a week, a month, 2 months, or 3 months. Do you have a sense of that?
Well, thank you. Yes, thank you for clarifying that. So I completely agree with what you're saying. And the issue isn't so much whether it's the accounting method, whether it be cash or accrual. The reality is it's the physical cash that's not in the provider's bank account, yet the money has been expended. And when you're starting a new client, of course, all the time and effort that's been expended to get that client actually on board, let alone the actual delivery of services. What happens there effectively, though, is that surplus that you make from the client, so to speak, will take time to come through to turn into. It won't happen overnight, but I think it's very straightforward for somebody to do an analysis and say, well, I think that could expenditure that you put onto that client will turn into a surplus over a period of time. And I just put forward a proposal for a 6-month period, but I think they could require a little bit more analysis to say, well, when does that actually turn into cash? That the surplus you have from that client turns into cash into your bank account. So that's my point, is really just to try and say what is that length of time? I think it's completely correct. We don't know exactly how long that is.
Thank you.
Mr. Panther, you might want to comment on that too. I then have another question to ask you.
I think for me, the acquittal...
You're on mute, Dr. Panther.
I'm not on mute at this end. Can you hear me now?
We've lost you.
Can you hear?
I can.
Can you hear me?
Lost both of you. So much for tax accounting, Mr. Gray.
I can hear you, David.
All right, yes, I can hear you, but they can't hear us, I don't think. But I lost the commissioner during his description of accrual accounting as well.
I'm informed there's a technical difficulty with the audio in the courtroom, and we might need to stand the matter down and see if we can resolve that.
All right, we'll stand the matter down for 2 minutes.
The Royal Commission is adjourned until 11 a.m.
That's what I said, 2.
The Royal Commission is now in session.
Dr. Panther, I think we were waiting for you to respond before.
Thank you. Yes, so I was just expressing my support for the acquittal process, but it is around the efficiency and the speed with which that actually happens, particularly given that it may be some smaller providers who have less cash flow that may fall foul of an acquittal process. And those small providers, in our experience, are often those who are working with particular niche communities, perhaps from cold backgrounds, etc. And so it's the way in which the arrears payments are made and how efficiently and quickly they're actually paid.
Yes. Yes, well, that sort of actually leads into the second question that I wanted to ask, and that is, one of the things that really has concerned me during the course of, in particular, this hearing over the last week and a couple of days, but also from what we've heard in the past, is that some providers are on very tight margins and doing it tough and having difficulties making ends meet. A process that would keep people, providers, out of pocket means that a significant proportion of funding will be shifted onto the providers, some of whom might not be able to deal with the additional carrying of the cost of funding, effectively the interest, whether paid or unpaid, or simply the cost of carrying that part of the economic burden of the system, which I imagine is not insignificant in economic terms. So I was actually quite tempted by the idea of Mr. Warner that some form of deposit be made available to the providers. At the moment, the legislation seems to provide that those people, particularly small providers, who think they've got a problem, should go to another government department to ask for assistance. I can't remember off the top of my head the name of the authority that they're supposed to go to, but that just strikes me as being adding to the burden of administration for the very people who don't have it. But a deposit might work because you put people in funds, and the funds would be to be applied as the payments have come in, and they're both in theory and in law no longer part of unspent money. It's just a payment in advance. Do you have some sense about what kind of carrying cost should be needed as a deposit?
What we do in our business at private level is typically 2 weeks services, and the challenge is for home care is not so much the big capital costs, it's always working capital. And I think particularly the challenge here is that we're in a marketplace whereby the demand just continues to grow, and that is really why we think this is an appropriate suggestion, because I don't think that it's appropriate for the providers to pick up that entire funding. So 2 weeks is what we use at a private level. But I've got to be honest, we haven't done any kind of absolute analysis on this. It's just what works is what it's come down to.
Yeah, but that sort of makes sense though, doesn't it? That about 2 weeks of cash flow might be the kind of figure that's needed as a deposit. Thank you for that. Dr. Panter, do you want to add to that?
I would support Mr. Warner in this proposal, and I mean, to give you some sense of scale, for the acquittal process and the impact it would have had on ECH when it was going to be introduced, the arrears system when it was going to be introduced, we at the time had around about 850 home care packages, and we were going to have to move about $1.5 million out of reserves into cash in order to manage that process of payment to arrears. And we could afford to do that because we had those reserves in our benevolent funds, etc. But for many organisations, that was not going to be an issue. It wasn't possible. And so to have some sort of deposit type process or some element that enables particularly those smaller providers to manage their cash and their liquidity would be very helpful.
Yes, Mr. Gray.
Thank you, Commissioner. Dr. Pender, I'll stay with you. Now's the time I'd like to elicit from you your views about outcomes-based funding, or at least incentive elements in home and community aged care funding arrangements. It seems that the advent of an arrears-based acquittal mechanism of some kind might be the occasion on which some sort of outcomes-based uplift could be added to the funding that's provided. What are your views about the criteria on which any sort of incentive mechanism of that kind would operate?
So, I mean, I think that we need to make sure that the system overall does is that balance of making sure that it not only incentivises good practice but doesn't have perverse incentives which fuel bad practice, particularly given the spectrum of potential providers. And certainly, you know, I know when I have been looking for support for family members and friends, you know, the judgment I'm making about a provider is if the goal is to enable somebody to carry on living independently at home for as long as possible, and indeed for them to die at home if that's their choice, then I want to look for a provider who has the track record and the evidence base of actually being able to achieve that. Whereas most of the focus at the moment is on inputs. And, you know, it's not a huge amount, but I would say about 10% of people that we deal with around a home care package, for example, in whether they're going to use us. It's usually the client or a family member, you know, sitting there with an Excel spreadsheet, comparing us with other providers on inputs. How many dollars per hour for this type of service, that sort of service, etc., etc. They don't necessarily get round to asking the question of, well, actually, what's your evidence for how do you support people? How long is their tenure of staying at home? How many people do you actually enable to have a good and respectful death at home, etc.? And what is the quality of life that's provided? And those sorts of, for me, those are the sort of outcome markers that should be more available for people to understand and have access to. And I think the funding mechanism for home care should recognise those factors and not just be based upon inputs. And I would want to see some sort of blended model which has both some upfront payments linked to inputs, but also on a 6-monthly annualised basis, the acquittal process or whatever, there should be something which actually looks at outcomes and rewards or otherwise for the outcomes that are being achieved.
Okay, so it's really distinct from an acquittal of the particular expenditures incurred. You're looking at those as inputs and they have their place, but you're talking about an overlay of an outcomes-based incentive payment of some kind.
Yeah, my big fear is that, and I'll draw a direct comparison, say, to primary care services, where in Australia we have primary care driven by the medical benefits schedule, which is input payments. We have no measures of quality, of whether or not people are getting a good service or not. It fuels expenditure because GPs can claim item numbers without demonstrating that that test was needed, that intervention was needed, etc., etc. And I compare that to the UK model, which has a blended, where it's inputs, but also evaluation of the population being served and whether the outcomes are, whether they're essentially keeping people well and for how long and what their levels of chronic disease are, those sorts of things. So I'd like to see that sort of blended approach where we're looking at recognising inputs, but also keeping a focus on the outcomes that are delivered.
Thank you. We're up against time, so Mr. Warner, I won't be able to go to you in detail on that proposition, but is it something that you agree with or not necessarily?
It's a rather technical area from my perspective. Our focus is very much...
Yeah. I'll leave it there because we're up against time. Can I ask you though, Mr. Warner, about the more rigorous reporting that might be imposed as a result of another set of proposals we've made towards the back end of our propositions? The operator could please put up PR1. We have in mind a proposition that the prudential regulator be empowered to, in effect, tighten up the reporting regime. Now, the focus has been mostly on the financial reporting of residential care providers. the current financial reporting regime as it pertains to home care providers is less stringent than the regime for residential care providers, in that home care providers essentially are reporting profit and loss and not balance sheet items, and don't receive RADs, so aren't accounting for inflow and outflow of RADs. All that being so, there's still an important public interest in understanding whether home care providers are getting into financial management difficulty. So there is a public interest argument for perhaps more regular financial reporting by home care providers, and perhaps to a greater level of detail than is currently provided. And this is the scope for this to be imposed is opened up by proposition PR1, which the operator might be able to put up on the screen in a minute, but perhaps you have it available to you. It's a proposition for the prudential regulatory body to be empowered under statute to require aged care providers to submit regular financial reports. It's up now. Thank you. Mr. Warner, what are your thoughts about this proposition? Is it appropriate, or is it too burdensome?
Well, I appreciate that governments want to ensure that the service they're providing is going to remain solvent, so to speak, and it's got all the reports that it needs to do some analysis. The main thing I would say is that, for example, in our business, we're not just government. So we can provide whatever P&Ls you want, but it doesn't necessarily reflect anything to do with government. So I just need to say you have to be cautious about what you're looking for and what you're going to use it for. If it's purely to understand whether the business is solvent, I can appreciate that. But there's a lot of other things that we need to understand what government's actually trying to achieve out of that. That's the main point I make. I've no resistance to it, but it's just got to be relevant and appropriate, is all.
Yeah. We've also got a continuous disclosure proposition at PR3, which might give the regulator advance notice of looming insolvency. Have you formed a view about whether that's appropriate to be applied to home care providers?
Only from the point of view that if government wants to protect its investment, so to speak, and so on, yeah, that's fine. I mean, reporting is not an issue for us. We would prefer not to have a lot of reports which are sometimes feel that they're meaningless, or are they just going to sit in a drawer or something, or what? Anything that's really relevant, absolutely, to improve the quality, completely support it. But it just needs to be agreed as to what's appropriate, what's relevant. That's the main thing for me, not just someone saying we need all this information, so more information the better. That really is the sort of area which gets gets me frustrated.
Yes, Dr. Panther.
I'm very comfortable with the propositions. I think that we need to have greater transparency across the sector as a whole, and certainly in home care. And I do think that disclosure around the financials, and again, do support what Mr. Warner said about making sure that the processes aren't onerous and creating unnecessary administrative costs, but that the financial health of an organisation will potentially have an impact, good or bad, on the quality of service and the quality of outcomes that organisation is delivering for the client at the end of the day. And so to have that transparency and greater transparency around the financials and the financial health of home care providers seems to me entirely appropriate, and something I would expect as a taxpayer as well as a potential user of the service.
Yes. Look, finally, Commissioners, if I may go on for another 5 minutes. Thank you. Dr. Panther, I want to raise an iteration of the proposed structure for the home and community services, which is been ventilated in the evidence. As you will have seen, our proposals are for grant funding, that is direct contractual arrangements between government and provider for the first three categories of services that we had displayed at the commencement of the hearing from Exhibit 20-1, tab 59, page 2, social support, assistive technology and home modifications and respite care would be grant funded, care at home would be package funded. Now, there's been a suggestion that for care at home, it might be appropriate to move sooner rather than later to a case, in effect, a case mix informed method of assessing eligibility for various levels of funding for more complex care at home and for basic domestic needs to have them payable in effect on some sort of fee for service basis or activity level basis. Dr. Panda, does that sound like a helpful iteration to you?
Yes, I think it is. I'm not sure. I've been following this hearing through, as you'd expect, and certainly was very interested in some of the propositions being put forward by Professor Eager in terms of her, in terms of the, I think was described as a sort of compromise sort of model around some of these elements. I think that to have that flexibility in terms of care at home, and I will just bring in another bit of my own evidence, just because it also creates the opportunity to get a better interface at the home care level between those other bits of the system that inevitably impact on somebody's ability to stay at home. And that's the hospital system and the GP or private systems. And that's what we're finding in getting some of the successes we are in helping people stay at home longer, is how you liaise between those elements and also substitute. So we now are able to provide more structured care in a hotel-like environment for people as an option, alternative to going into hospital, for example. And we're able to fund that through somebody's package. But many providers wouldn't necessarily be doing that because they wouldn't have the ability, wouldn't necessarily think that was possible. But we have started to do it. It's had real improved benefit for the individual and enabled them to not go into hospital, stay out of hospital, albeit not quite in their own home, but very quickly go back to their home. And to have that ability to flex within the package and to have that more sophisticated case mix type model underpinning the assessment process without necessarily going as far as individualised budgets, I think would be very positive and very helpful.
Thank you, Dr. Panta. Mr. Warner, I'll give you the final word. Do you wish to comment on what Dr. Panta said? Add anything? Disagree?
The main thing I want to say in terms of what we're doing here is that the social support side of things, I understand that a lot of that would need to be grant funded, but I think we need to open up that grant funding in a wider way to providers. It seems to be locked in, and the bigger disadvantage I find is that it actually captures a whole group of potential clients in one area. And when you grant fund that to particular organisations, it's in a sense a feeder into the rest of the business for them. So I think that there's a degree of I don't think it's the most efficient and effective way in terms of providing choice to clients. That's been one area I'd comment upon in that area. But I understand that some of the thinking behind it. I just think the whole opportunity for organisations to receive those grants needs to be expanded.
Thank you very much, Mr. Warner. Commissioners, I have no further questions.
Yes, thank you. Well, let me thank you both again very much. Dr. Panda, this is your second appearance, but both of you have put in submissions in the past and have been very helpful to us in our work. We're very grateful for the efforts that you've put in, and we thank you very, very much indeed for the assistance that you've given us. I'm delighted formally to excuse you from further attendance, and thank you again.
Thank you.
Thanks very much.
We'll adjourn now for 10 minutes. Adjourn for 10 minutes.
The Royal Commission is adjourned until 11:20 a.m. Royal Commission is now in session.
Great.
Thank you, Commissioner. I call Professor Henry Cutler.
Professor Cutler, do you solemnly and sincerely declare and affirm that the evidence you shall give will be the truth, the whole truth, and nothing but the truth? Please say, I do.
I do.
Professor Cutler, you're the Director of the Macquarie University Centre for the Health Economy, and you've had that role since 2015, correct?
Correct.
You're an experienced health economist. You've got a PhD in economics, UNSW 2009, a Masters in Economics at USYD in 2002, and a Bachelor in Business from UTS in 1997. You've previously worked for KPMG as Director and National Lead of Health Economics, and Macquarie University Centre for the Health Economy is a strategic university initiative developed to undertake innovative research on health and aged care systems. And in your role as Director of the Centre for Health Economy, you've conducted a great deal of research, well, a good deal of research into the aged care system in Australia, including financing mechanisms such as the exchange between RADs and DAPs and topics of that kind. Is that all correct?
Yes, that's correct. I suppose my aged care experience also extends to my work at KPMG and also Access Economics.
Thank you. Could I just ask you about a statement you've recently prepared for the Royal Commission? And I should thank you for appearing again in the Royal Commission because you appeared back in February as well. This statement is RCD 999903800001, dated 21 July 2020. It should be currently displayed. Is this a statement you've prepared recently for the Royal Commission?
It is.
And are its contents, to the best of your knowledge and belief, true and correct, and the opinions in it opinions sincerely held by you?
Yes, they are.
I tender the statement.
Yes, that statement will be Exhibit 21-25.
Thank you, Commissioner. Are there some, I should have asked you this beforehand, perhaps, Professor, but are there some minor corrections of a typographical nature you wish to make?
Yes, there are.
At paragraph 26 in the first line, do you wish to delete the words lack of?
Yes.
So that reads, there's also been a potential underinvestment in new facilities.
Correct.
And in paragraph 44 on the fourth line, where there's a reference to the average price agreed between providers and residents, should that be the average accommodation price?
That's correct.
And should the last word of paragraph 47 on the next page be quality rather than competition?
Correct.
Thank you. Are there any other corrections?
No.
Thank you. Now, the Royal Commissioners have heard evidence over the last 7 days, Professor, about funding levels in residential aged care being inadequate. That's in effect been acknowledged by the Department of Health. I won't seek to elicit any evidence from you about that foundational proposition, but I will seek some theoretical assistance from you about linkages between prices, costs and quality in health economics. In your statement of paragraph 27, you refer to some broad-based research originating from Germany on these topics, and you go on in your statement to refer to the linkage or the correlation between prices and quality. You've also been furnished with a report prepared for the Royal Commission by the University of Queensland on the cost of aged care, which attempts to correlate expenditure on care with quality outcomes,
Mhm.
what are the linkages between costs, prices, quality and efficiency in this context?
Yeah, so we know that the amount of funding given to a residential aged care provider and the way that the funding is delivered can impact care quality. The reports or the literature that I referred to in my witness statement has shown in particular that there is a relationship between prices and quality, at least within German nursing homes. So higher prices have significantly increased quality, based on an index comprised of 7 risk factors. We know that price plays an essential role in the delivery of aged care. So when we look at the way that price is thought of, in particular within a competitive market, organisations can compete on price or quality. And if they are competing on price, then there is a potential situation whereby if quality is not measured very well, then organisations can compete on price and effectively push prices down, which means that there is less scope to maintain quality. So, for example, if prices are pushed down by the market, it means that some providers may reduce their quality to compete at a price level. So we know that there is a relationship between price and quality, and we know that there's a relationship between costs and quality as well. So if we look at the UQ report, titled The Cost of Residential Aged Care.
Tab 14.
Sorry?
I'm just telling the operator to bring up tab 14.
Okay.
Thank you.
Yeah. So there is a correlation between increased costs and better quality within that report, and that makes sense. So it costs more to produce better quality. So the only way for a residential aged care provider to fund improved quality is to receive higher prices. I think
So
one of the
we'll go
interesting...
to 0554, just while you're talking. Sorry, Professor.
One of the interesting points that the UQ report states is that they didn't find a strong association between higher quality and higher staffing hour per resident per day. Normally, we would think that an increased cost due to increased quality is because of more labour input. But in actual fact, it's probably a little bit more complicated than that. Not only is it labour input, but it's most likely going to be staffing quality, the way that the environment has been set up, management system structures, those types of things. So overall, yes, there is a strong relationship between cost, quality and prices.
Thank you. Now, in your report, one of the things you said on this point, paragraph 39, is that fixed prices are more likely to increase quality. Does that flow from what you've already said? Is that in effect the corollary of competition on price not necessarily being conducive to good quality outcomes?
That's right. So if quality is poorly measured, and one would contend within residential aged care it is poorly measured, that is at the point where someone wants to enter residential aged care, they find it difficult to measure the quality of their care, then people are going to be more responsive to price. So in a market where there's poor quality measurement, providers are more likely to compete on price. If we fix prices, then the only way that providers can really compete is on quality. And we can see that both in the theoretical literature and the empirical literature, particularly around competition for patients in hospitals.
In your statement, this is at 35 and 6, you refer to the concept of cost efficiency, and you say there are some impediments to cost efficiency in residential aged care. What do you mean by that?
Yeah, so a couple of things. So first of all, you, as a provider, you are often incentivised to reduce costs. And the reason is because you can obviously make more profit, and you could potentially also reduce price to attract more consumers. One of the issues with the residential aged care sector is that there are relatively high occupancy rates. So within the Stewart-Brown report that was recently released, it suggests that the occupancy rates is around about 94% on average. That's mostly within metropolitan regions. So that means that given that there are high occupancy rates, the incentive to attract additional people into residential aged care facilities is somewhat mute. That is, I suppose, a result of the structure that's been set up within the residential aged care sector. So there is high barriers to entry that are imposed by the way that the government allocates bed licences. So there is effectively a cap on the number of bed licences that are issued through the National Aged Care Planning Round. And that in some ways reduces competition and the need to seek further efficiency costs.
If we go back to the UQ report, is one of the conclusions drawn there that by comparison with countries around the world, Australia actually performs well on cost efficiency overall?
Yeah, so that is what the report says. I'm always wary of comparing the Australian setting with international settings in aged care and healthcare, because we have different systems and often studies have different methodology, different assumptions, different data availability. In this case, there's large differences in the way quality is measured within aged care. And since efficiency crucially relies on adjusting output for quality, then you'd be expected to see differences in efficiencies across studies. I suppose the other point that I'd like to make is that that statement made in the UQ report is based on a literature review that was undertaken by the same team. And within that literature review, I think there was about maybe 35, 36 studies. Half of those were from the US, and then the next 25%, so around about 75%, were from the US, Switzerland, and Finland. So we don't really have a good understanding of the efficiency of residential aged care providers in a whole bunch of different countries, and we don't have anything, particularly from countries like the UK.
A minute ago, you said something about the importance of understanding the relationship between price and I won't get it right, Professor, but it's something about the importance between the relationship of price and outcomes, especially where quality is not well observed.
Mm-hmm.
And I wonder if you could explain that further, and what would be your proposals about how quality observation should be improved in our system here in Australia?
Yeah. So as I said prior, there's primarily two components within the market. There's the price, and then there's the quality that's delivered. What we have at the moment within the sector is a situation whereby someone who goes to a residential care facility, who is looking to maybe place their mother or father within that facility, who can see the quality potentially of the rooms, the shared common areas, the chandelier that's hanging from the ceiling, but doesn't have a very good understanding of the quality that is being provided within that facility. And one would argue that they only receive or better understand that quality once they enter the facility. And even then, it may be difficult for them to determine the quality of their care because they don't have anything to benchmark it against. It's not like they've been to another, or most people haven't been to other aged care facilities. So it means that the nexus between price and quality is somewhat broken, because you cannot compare the price to the quality of care that you're receiving very well. And that means people, because they can't view quality, are not probably that responsive to quality. One of the issues that we need to deal with, I think, in the aged care sector is making sure that those quality metrics are available to people when they enter residential aged care. And we do have a national aged care quality indicator program, but it is fairly immature in its development. And I would argue that the indicators within that probably don't represent the type of value that people are looking for within care. So yes, they do look at some quality indicators, but we know that there are a whole bunch of other factors. So at social activities, food, for example, that also are important to a resident. And they should also be included in a framework, a quality indicator framework. And that indicator framework should be made available to residents as they enter care and easily compared across residential aged care facilities, maybe through, for example, some quality index.
So in the absence of us having a basis to properly measure care quality at the moment, and also by reference to those other constraints you touched upon, including the things that some of the things you mentioned in your statement, the rationing of allocation of places and such like that. Are these all indications that we can't rely on, in effect, a demand and supply free market mechanism to determine price, and therefore we need some sort of regulatory intervention on price?
That's correct. Yes. So we have a situation whereby competition is somewhat restricted in residential aged care because of the National Aged Care Planning Ratio and the aged care allocation rounds. We have a situation whereby the resident or their family cannot determine the quality of care very well as they enter a residential aged care facility. And we also have the situation whereby most people, when they enter residential aged care, are in a very vulnerable position. So it's something that they may not want to happen. It's often done out of necessity. And in some instances, there is limited time to find a residential aged care provider because someone may be in hospital who needs to find alternative accommodation outside of hospital. So in that instance, there is a difficulty for the consumer or for the resident to assess quality compared to price. And that suggests that there should be some continued regulation of price on care.
Thank you. With that contextual theoretical framework, and with the way you've explained how those concepts link to conditions on the ground in the aged care system generally in Australia, can I now test with you a number of propositions that the council team have been raising for consideration of the commissioners during this hearing, and they've also been commented on by the witnesses through the hearing. I'll start with FF3. This is tab 111. Tab FF3 is on page, proposition FF3 is on page 0004, and it's in effect a statement about when a particular body we're calling the Aged Care Pricing Authority should be responsible for determining what, if any, regulation is applied to private prices for aged care services. And there is a statement of principle about, in effect, the onus being in favour of regulation, save where it's demonstrated that there's a workably competitive market for the relevant services. Do you agree with that proposition?
I do, yes.
And in terms of the types of regulation that might be appropriate, what are the sorts of interventions, regulatory interventions, that might be appropriate for the various services?
Around pricing?
Yeah.
Yeah. So I think that there needs to be price caps for living expenses and for care, primarily because we don't have a competitive market, and in some instances there may be some providers who, for want of a better word, take advantage of a situation whereby there isn't a good, strong relationship between price and quality. In terms of accommodation, so we have a situation which is a little bit different from living expenses and care. Accommodation is something that a person can in some ways view in terms of quality. So they get to see the room, they get to see the building and its state. They also get to see the common areas. So in some ways, they have an understanding of the quality of accommodation that they will receive. Having said that, though, because there is limited competition within residential aged care providers, i.e. there are high occupancy rates, there is still the opportunity to for a provider to ask for a price that is much greater than what the accommodation is worth. And I think in those instances, we want to ensure that that individual is protected somewhat. So I personally think that the way that it is currently operating, whereby we have some flexibility in accommodation below a threshold, a 550,000 threshold, works well. And if we are seeking an additional price above 550, then in some ways that needs to be justified. Okay,
thank you. Can I just ask you about occupancy levels, because that featured in a response you just made, and you referred to a Stuart Brown report on a 94% average occupancy level across residential care a minute ago. If the occupancy level was in fact down around 90 or even slightly below 90%, would that change any of the analysis that you've just expressed to the commissioners?
No, I don't think so. It's really about how can a facility charge price above what a room is worth. And so in some areas, there may be a situation where there is competition, and that competition does drive down prices, or at least stops prices from increasing exponentially. But in other areas, that may not be the case. And we have to think about what the aged care market really is. It's not a market as such. It is a local market. People aren't willing to travel long distances. So the relevant market for an individual is, let's just say, a 10, 15 kilometre radius. And so there will be variations across different parts of Australia as to competition levels. And so I think it's still appropriate to ensure that those residents who are in areas where there is limited competition are protected.
Is there a case for a higher level, a higher form of regulation than the current form of provisional limit and waiver by the Pricing Commissioner of accommodation charges? For example, if a resident is looking for aged care services in an area where there is a real constraint on supply and occupancy levels are very high. Or if there is, well, I'll just leave it at that to begin with, or across the board, is there an argument for a form of gradation of accommodation charges based perhaps on an analysis informed by land prices in different regions or different areas of distance from capital city centres?
So you're referring to accommodation prices, is that correct? So everything above 550 and how that's calculated?
Yes. Is there an argument for a heavier form of regulation about accommodation prices, whether that be in the form of a lump sum deposit or a daily charge, than the current arrangement whereby the Pricing Commissioner may waive the upper limit of 550 based on fairly loosely defined criteria of relevant considerations? Yeah.
Look, I mean, in this situation, we need to sort of think about the administration costs of introducing a much more detailed approach to regulation. And in my opinion, I don't think that's required. I think one of the benefits of the current arrangement is that it sends a strong signal to providers that we're not going to tolerate accommodation being priced at an amount that is significantly higher than what the accommodation is worth. And I think that is the real benefit from the current approach. It's the signal to providers that we want you to ensure that your price reflects in some ways the cost of accommodation.
Yep. I'm going to ask you in a little more detail about the possible mechanisms by which the price caps that you've in effect advocated on living expenses and care might be determined. But before I do that, can I just ask you just to confirm a few things that the Royal Commissions have heard from others this week, or over the last 7 days, I should say, and that is that there's an argument in economics for prices to be arrived at which reflect the cost inputs necessary to provide the services for which the prices are charged. And there's an argument in economics against, in effect, cross-subsidisation of the costs of providing other services from revenue earned through prices charged for distinct services. Have I basically got that right, that there's an argument in economics that pricing should be reflective of the cost inputs for the particular services and there shouldn't be cross-subsidisation across different services? That's right.
Yeah, so the problem with cross-subsidisation is that it introduces perverse incentives. So, for example, if you were to allow accommodation to cross-subsidise care, then you have a situation whereby people are paying more for their accommodation and they may not be receiving the complete benefit from the care, i.e. that care is cross-subsidised for everyone within the facility rather than just that individual. It can also lead to some other interesting outcomes as well. So, for example, if care was not properly funded and providers are cross-subsidising care through accommodation, then you would expect that for those areas that have high land values and high property values, where there's likely to be high accommodation prices and the capacity to charge more for accommodation, in addition, above the cost of accommodation, then those people are more likely to receive better care compared to someone who lives in an area with low property values. And and that may be considered inequitable to some, given that care may not then be completely based on need. So from that perspective, it is better for outcomes and more efficient if care is appropriately funded for its cost and accommodation is appropriately funded for its cost.
I want to leap down the list of propositions to a proposition about acquittal of care expenditure. And I just want to ask whether what you've just said is a good argument supporting a requirement for acquittal of care expenditure, so that it's in effect transparent to the governmental system manager what particular providers are spending on their care, and whether that is in effect reflective of the subsidy that they've been paid to provide care. It's proposition FF12 on page 9.
Mm-hmm.
And underneath the bolded words, it says the funding arrangement should provide a clear line of sight between the source of funding and expenditure on care. The Australian Government should require approved providers of aged care services to acquit overall expenditure on care or care staffing hours on a quarterly basis, etc. Professor, what's your position on that requirement?
Yeah, so my position is that first of all, we should be measuring outcomes rather than inputs. So in a perfect world, we would have an aged care system whereby we have a quality indicator program that gives us a very good understanding of the quality of care that's being delivered in residential aged care. I think that's something that should be put on a reform agenda and up front, i.e. it's one of the first cabs off the rank. In the absence of that, though, we might want to think, well, are providers actually spending the money that's given to them by the government on care? And we'd like to think that they are. I understand the desire for an acquittal process, but at the same time, it needs to be balanced, because an acquittal process can add additional administration costs on providers. Depending on what the acquittal process is, it can reduce the ability of providers to be flexible with their staffing arrangements. And I also want to add that there's no guarantee that increased staffing will improve care. As I said before, the UQ report suggests that that is not always the case. And in some ways, it's more about the quality of the staff plus the amount that's provided that will determine quality. Of course, good care is not guaranteed. Even if you increase costs, it relies on the interaction of staff with their environment. It relies on management structures and systems, infrastructure, technology. Also, the culture within the aged care facility, training, leadership, those types of things. So while I understand the acquittal process is there, I think it should be, if introduced, a temporary process until we can better measure quality.
Thank you. Let's get back to, in effect, the mechanics that might be involved in determining what is a reasonable cost-reflective price for care. And I want to put up FF1 and FF2. These are proposals for independent pricing for well, a range of potential aged care services. But given what you've just said, I want to suggest that they would at least include care and living expenses or the charges for basic daily living needs. What do you say about the detail of proposal FF1 for this independent mechanism, we've called it the Aged Care Pricing Authority, to review information including cost data, to conduct cost studies and benchmarking, and to set or at least recommend levels of funding that are needed to meet the cost of delivering, in particular, care and basic daily living needs.
Yeah, so I think it's a really important proposition, and I think it's absolutely necessary that we have an independent authority that evaluates cost data and determines prices. So in the past we haven't had that. Obviously, we've had ACFI. ACFI has individual prices, and in some ways that has been used to manage government budgets by adjusting prices within ACFI, which doesn't necessarily reflect the cost of care. So I think it's a really important proposition.
And can you are you able to comment on FF2 as well? Does that go without saying that the funding levels that are set must include indirect costs that are necessary to the provision of the particular service?
Yes, of course it should.
And these principles about the undesirability of cross-subsidisation, is it in these processes that they really need to come into play? You need to be careful to ensure that the cost inputs on which these prices are set or recommended are only the costs of providing the services so priced, and you're not bringing in costs for other services. Is that how it works?
That's correct, yes. So defining what you're paying for and then working out a price for that service.
And going back to what you said right at the start of your evidence about how we don't understand quality very well, we don't know how to measure quality very well yet, would that be a critical input in the process as well?
Yeah, that's right. So prices must be set to the level of quality that we desire, rather than the current levels of quality, given that there has been a suggestion throughout the Royal Commission process that quality is not appropriate within the aged care sector. So that is an important component within setting prices, determining at what level of quality should the residential aged care sector achieve.
Now let's just look down the list to FF7, which is a proposal, and we have predominantly in mind here residential care. It's a proposal for aged care services to be funded through case mix adjusted activity-based funding arrangements. And in the narrative underneath, there's a reference to the work of the team led by Professor Eager in developing the new case mix adjusted activity-based funding model, ANAC. So, Professor, this would require the determination, would it, of something like a national efficient price, analogous to the national efficient price determined annually by the IHPA for hospitals, and that would anchor a case mix model such as ANAC. You've expressed some caution about whether efficiency is the right lens through which to convert the costing studies that are performed by this body into recommended or determined prices. Can you explain that to the commissioners, please?
Yeah, so I suppose my caution around a national efficient price is based on two components. So first of all, if we think about an efficient price, it means that some providers will not be able to cover their costs because they are inefficient. Obviously, that's the purpose of setting an efficient price, to encourage providers who have high costs to reduce their costs. But setting an efficient price when some providers are significantly efficient may result in some providers exiting the market and leaving some residents stranded. So, or in addition, some providers may reduce their quality to reduce their costs to meet an efficient price. And here is where, when we come up again with the issue around quality, measuring quality appropriately to ensure that things like, introducing a national efficient price doesn't mean providers try to meet that efficient price by reducing their quality. So, under a national efficient price, we maybe have a situation where more efficient providers can flourish. But in some areas, you might have some providers that don't flourish. And this is, I suppose, particularly an issue for areas that have limited options, rural and remote areas, for example, whereby if the price is not set appropriately, then you may have a situation where you don't have an aged care provider in close proximity. The other point I want to make is also the difficulty in setting an efficient price. And the reason why I say that is because efficiency used to be measured on some outcome measure relative to cost. But the issue is that, unlike utilities, outcome within residential aged care is not homogenous. It is quite variable, and it depends on the quality of care that an individual receives and how that individual responds to that receipt of care. So developing a national efficient price crucially relies on measuring output and measuring the quality of that output. And that may be difficult in a situation whereby we're looking at residential aged care and unless we've got good data on output and outcomes and quality.
Can I just ask you about the extent to which what you've just said is in fact compounded, I suppose, by a certain dissimilarity between hospital admissions and the experience of a person in residential aged care. A hospital admission is essentially a course of treatment for a particular episode in that person's health, and it has a defined beginning and a defined end, and presumably there's very often a procedure that's undertaken. There might be several, and there's an outcome, and all of that seems reasonably measurable, and there's also very high volume. So what sometimes called by mathematicians the law of large numbers comes into play, by which you can smooth out volatilities in the individual experience and get a picture of a pattern of cost inputs for a particular kind of hospital admission. To what extent does that hold true for aged care? And what are the tools by which the pricing authority might have to cope with that? And on which side should it err, on the side of average costs or efficient costs?
Yeah, so there are going to be differences, obviously, in the mix of residents that come through a facility. I suppose the first point I'd like to make is, that should be assessed at the provider level rather than the facility level. The second point I'd like to make is there are some provisions within hospitals for differences in volume. So relatively large hospitals are funded by one method, activity-based funding, and hospitals that are smaller are funded through another means. I suppose if we were to take into consideration differences in resident mix, yes, there will be variation in funding, given that there may be small numbers, and there may have to be some adjustment for relatively small providers, particularly if they are in areas that may have higher costs. So, for example, in rural and remote areas where their access to labour may not be as good.
Still, in our proposals, if we go to FF5, please. We'll start with FF4. If we go to FF4, we've proposed that the authority, this pricing authority, should be able to examine and make determinations about loadings to be payable in thin markets. ANAC itself has a mechanism for on the Monash scale areas in MMM 6 and 7, those rather remote places to receive, in effect, block funding by way of one of the tiers of funding under ANAC. So I suppose, Professor, there are ways in which these matters can be addressed either through ANAC or through loadings. Would that be your view?
Yes. Yeah. I think you do want to ensure that, particularly in thin markets, access remains available to potential residents and residents who are currently in residential aged care. So, yeah, it is a standard way of accounting for some differences in costs.
Yeah, thank you. Maybe by way of last resort, if loadings are unsuccessful, the proposition also envisages the possibility of simply commissioning a provider to be the provider of last resort on, in effect, whatever price can be negotiated with that provider. Is that a suitable and appropriate fail-safe mechanism?
I think so, yes.
Yep. Now, can I just ask you about the connection, and I think we've got to take it one category at a time, the connection between setting subsidy levels and the potential for setting price caps. If we take care, are the two things in effect synonymous? Are we talking about one and the same thing, the authority setting something that operates both as a subsidy level and as a price cap, subject to any user contribution through means testing?
Yeah, that's right. So I don't think they necessarily have to be one of the same thing. You can have a price cap that providers are allowed to reach, but at the same time, the government may provide some level of subsidy that is below that price cap, and the difference would then be made up by co-contributions to care. That is a plausible option. We just want to make sure that price cap is set at an appropriate level, whereby the difference between the subsidy and the price cap doesn't exclude people from care.
Would you have the same pricing authority perform functions relevant to the determination of subsidies?
In terms of trying to work out how much the subsidy should be set at?
Yep.
Yeah. Yes. That would be a natural activity within an aged care pricing commission, given that they hopefully will have good, robust cost data.
Yep. Okay, and let's focus now specifically on living, unless there was anything else on setting both price caps and subsidy levels for care, but we probably covered it, I think.
Yep.
We'll go now to basic living needs and the charges for that and the expenses for that. Mm-hmm. The current situation is that for some time now, the basic daily fee to cover living expenses has been price capped at 85% of the basic single age pension, hasn't it, Professor?
Yes.
And it is the fee that is in effect mandated for the provision of a range of daily living services which are defined in delegated legislation. The evidence is, and this is primarily Stuart Brown, it's fallen behind badly and it's now significantly underfunding the provision of those daily living needs. what should be the approach of the pricing authority or regulator to this matter, in your opinion, Professor?
Yeah, so it's a bit of a tricky one because we have a situation whereby 85% of the single pension is being used for daily living expenses. And now we have providers saying to us, well, in actual fact, that isn't enough. We need more. I suppose one of the roles of the Pricing Commission would to ensure that they get a good understanding of how much it costs to deliver daily activities and where there is variation in daily living activities, why that has occurred. It's hard to ask someone to pay more for daily living expenses when they've got no more to give. There's a significant proportion of people, most people within residential aged care, who are on a single pension. And so taking more from that, I think, would not allow them to spend money elsewhere for social activities, for example.
So, well, can I suggest this? Should the regulator or the authority, on the basis of the cost reviews and perhaps differentiating between different regions on the basis of remoteness, say, come up with a subsidy level or a price level, let's call it a price for daily living.
Mm-hmm.
And for people who have the means to pay that price, they should pay it in full. For pensioners or for other people who don't have the means to pay it, their contribution should be capped, and for a pensioner, presumably it should be capped at 85% of the basic single age pension, but the government should top up the difference between 85% of the single basic age pension and the price that's been determined by the authority. Would that be an appropriate approach?
Yes, I think so. Yes. Yeah, I mean, the important point is, you don't want providers to be ramping up their daily living expenses because then the government would be, or potentially the supported residents, taking on quite a bit of costs. So you still want to ensure that you have some control over those prices.
What about so-called additional services? What role do they play here? The Royal Commissioners have heard a bit of evidence about it, or about them, and also about the predecessor of extra services, but I think we can focus on additional services now.
Yeah.
What's the connection between them and, in effect, sort of guaranteed basic daily needs, and should any regulatory approach over and above what's currently done be applied to additional services?
Yeah. So I look at this as a comparison of needs to wants. So daily living expenses, care, residents need those activities. Additional services fall more into the wants. And I think the difference between the service characteristics also is that it's much easier to evaluate the price that you're being charged in a residential care facility compared to what you would have been charged outside of a residential care facility. So it is therefore harder for a provider to increase prices for additional services beyond what is reasonable. So, for example, if you are looking for a haircut and the provider is charging you $150 for a haircut, you know that something is a bit fishy because you could get a haircut outside of a provider for, let's just say, $50. So I don't think there needs to be regulation around pricing for additional services.
Okay. Is there any scope for, and this is perhaps controversial, additional care? What's the situation with additional care? There have been views expressed in some of the material before the Royal Commissioners to the effect that in terms of economics, provided an acceptable minimum high quality of care is mandatory, and that is what is provided in return for subsidy, to which there might be user contributions subject to mean testing, of course, then over and above that amount, in the health system, for example, we have private health insurance, we have a private health system sitting alongside the public health system. What would be wrong with having the ability for people to purchase additional care over and above that minimum high quality? What are your views?
So I think people should be able to purchase better quality care if they have the funds to do so and the desire to do so. One of the issues that we have, though, is that for some residents, they may be priced out of a market. As I said, most residents consider the residential aged care sector as being within 10 to 15 kilometre radius. And you have a variation in wealth within suburbs. So you don't want a situation whereby you have 4 or 5 providers who've all decided that they want to provide high levels of care and charge high prices when you have individuals who just can't afford those prices. So yes, allow some people to provide more care allow some providers to provide better care for those who want it, but you need to make sure that access is maintained for others.
And does that involve, in effect, and this is I think a feature of the current system, that a provider that's receiving Commonwealth subsidy to provide care must provide care at that subsidy amount and at no more, and it's in effect completely at the option of the care recipient to make arrangements for more, and they're free to make arrangements for more, but it could never be a feature of the system that a provider is permitted to demand more for care, more money for more care. Is that a fair summary of what you're saying?
I'm not too sure whether I'd put it in those terms. I think we just need to ensure that we have options for those who want to pay for more care, and options for good quality care for those who can't afford to pay for more care. And one of the barriers to that currently is the fact that we have the National Aged Care Planning ratio. So if you had a market whereby there are a bunch of providers who decide they all want to provide very good care and they won't allow individuals in unless they can pay for that very good care, then you're more likely to have a gap in the market because there are restrictions to entering that market due to the ACAR and the National Aged Care Planning ratio. So we need to ensure that the market is competitive before we start allowing providers to charge more for care.
Yep. Thank you. Can I go to another proposition? This is a transitional one. I think you've probably already given evidence that covers it, but I'll just make sure that we get your view on the record. It's FF10, immediate funding measures to improve the quality of residential aged care homes. This is a proposal which is intended to cover that transitional period before the independent pricing mechanism is up and running. And it's a proposal, it'll probably come up on the screen in a minute, it's on page 0007, FF10. Thank you. And it's a proposal for acquittal-based increases in staffing levels in the interim before the independent pricing mechanism is up and running. I think a minute ago when I was asking you about acquittal, you said it might be acceptable as an interim measure. What do you say about this proposition as an interim measure?
So this is the Australian government should make additional funding available to increasing staffing levels.
Yes.
Yeah, look, yeah, I think that the Australian government does need to make additional funding to aged care providers. As I said, though, increasing staffing levels, it's not just about the staffing level, it's also about the quality of staff. So there needs to also be investment in training for staffing, and the quality of staffing, if that was also increased, is likely to improve quality as well.
Yes. Thank you. I'm going to ask you in a minute about the approach that should be taken to transitional arrangements at a higher level of generality. That was one particular detail, but from a health economics perspective, I wanted to get your views on what are the principles that should inform the sequencing of reforms and the approach to governance of implementation of reforms. But before getting to that, there are just a few more details I should ask you about. On the accommodation side, you've told the Royal Commissioners, and thank you, that in effect you view the current form of regulatory scrutiny of accommodation prices as appropriate and as proportionate, and that going further might be disproportionate. And of course, we're talking now about that provisional limit of $550,000 for a RAD or its equivalent DAP, and about the ability to approach the Pricing Commissioner for a lifting of that limit in specific cases. Should the criteria on which the Commissioner acts be more prescriptive than they currently are? They're fairly loose at the moment. What are your views?
Yeah, I mean, I don't think so. I think they're set appropriately. As I said before, it's really about providing a signal to providers that you're not going to be able to set an accommodation price that is grossly inflated compared to the cost of accommodation. And I think the Pricing Commissioner can gauge as to whether that's occurring through the information that they currently receive.
Should the accommodation supplement, so that is the subsidy paid by the government in effect on behalf of people who, subject to a means test, are not able to, are deemed unable to pay for their own accommodation in whole or in part, should that be determined by the Pricing Authority?
Yes, I think it should.
Should it be a uniform figure, as it essentially is at present for all new and refurbished facilities, or should it vary regionally based on land prices, or perhaps some sort of metric of remoteness from the centre of capital cities?
Yeah, so I think ultimately that's a question for the Aged Care Pricing Commissioner that they need to answer once they've collected data on the cost of accommodation. So, it really depends on the variability in costs associated with accommodation. If there is huge variability, then yes, there is an argument for trying to refine that price. But if there is, a fairly homogeneous cost for accommodation, then I think an average price is probably appropriate. Again, we need to trade off the administration burden with potential outcomes.
With the concept of a sector-wide or perhaps broadly segmented weighted average cost of capital be a useful input into the Pricing Authority's deliberations about setting the accommodation supplement?
Yes, it would be. Yes, it would give them a good understanding of how much it does cost for accommodation.
And have you had a chance to familiarise yourself with the report of Frontier Economics at General Tender Bundle tab 23? So that's Exhibit 21-1, tab 23.
I have looked through it, yes.
And is that the sort of analysis you'd expect to be taken into account by the Pricing Commissioner on that matter of setting the accommodation supplement?
Yes, that's correct. Yeah, it's a fairly standard approach to looking at accommodation costs.
Okay. Now, outside the accommodation supplement, we're into the area where you've got non-supported or unsupported residents, but you don't see a case for price capping the accommodation charges for them. You've given your answers to the Royal Commissioners about how they should be treated, and you're effectively content with the current system.
Correct.
Thank you. What about the conversion between RADs and DAPs? You've referred in your statement at 17 to 19, paragraph 17 to 19, of quite a significant body of work that you've done over the years, and that you are currently engaged in doing, in considering issues raised by RADs in the system, and you've done modelling in the past about, in effect, expected behaviour by people in converting between RADs and DAPs. Firstly, is there any currently prescribed methodology for I beg your pardon, I'll withdraw that. I think you've already answered it. Is the current conversion rate between RADs and DAPs an appropriate rate, both in terms of its amount, but perhaps more importantly in terms of its derivation and the methodology for its calculation, which I understand is based on a 90-day bank bill?
Yeah. So there's a couple of points I want to make here, and I'm referring to arguments that are within the sector as to whether the DAP should be converted from a RAD using an MPIR or a WAC. I suppose my answer depends on whether we're taking a consumer perspective or a provider perspective. So, and also when we're talking about equivalence, what are we talking about the equivalence of? So if we take a consumer perspective, and we assume that the MPIR is used to ensure a DAP is equivalent to a RAD, then from a consumer perspective, the MPIR should really represent the opportunity cost of using a RAD. So, for example, if you had a RAD that was worth $100,000, for argument's sake, and the real cost of that RAD to the consumer is the return on investment that they would not otherwise receive. So that $100,000 may have been invested in bonds or stocks or kept in the family home, and there's a return on that. So that means that the cost to the consumer of a RAD is the opportunity cost of not receiving funding elsewhere. Let's just say that's 5%. On a $100,000 RAD, the cost to the consumer is really $5,000. Now, if you think about the DAP, setting a price based on an MPIR greater than 5%, so what might occur, for example, if you were to use a WAC, means that the consumer will pay more for selecting a DAP. So the price to the consumer is therefore, so when I say consumer, I mean resident, all the families and friends. The price is therefore not equivalent based on whether a person chooses a RAD or a DAP, and the difference in price will crucially depend on the difference between the what the person could otherwise have received in their return and their WAC. So in this situation, you may have, and the WAC has been used to convert to the DAP. So in this situation, you may have an example where you've got two people with the same assets, the same income and the same room, but they're effectively paying different amounts for the room because one chose a RAD and one chose a DAP. Now, if we take the provider perspective, and some may argue that this is fair. So that is, because a person has chosen a RAD, which means less cost of capital, then they should pay less for their accommodation. However, obviously, some residents may think that is unfair because they may not understand that choosing a DAP would have cost them more, essentially. We also need to consider how accommodation prices are set. So prices are typically not a direct reflection of the cost of building and financing the room. They also include some type of margin. So a room may cost, for example, 250,000, whereas the RAD may be set at 400,000. So there's a margin there. So we need to then think about, okay, well, is it appropriate to apply a whack to the $400,000 RAD when that is priced as the cost of the room plus an additional margin? And I would suggest that it may not be. I think we all have to remember that providers have other levers if the WACC is greater than the MPIR. In particular, the provider can increase their accommodation price. And from my perspective, I think that is probably the most appropriate tool they should be using when thinking about covering the cost of their capital.
Thank you. So just one quick question. Right at the start, and I probably should have asked you then, you referred to the opportunity cost of a person electing to lodge a RAD, a deposit, rather than electing to pay a daily fee or a daily payment. And when you said that, you gave the example of, say, it might be 5%, the opportunity cost might be 5% of the principal. If it was $100,000, it'd be $5,000 per annum in terms of opportunity cost. What did you mean there? Was that the lost opportunity of investing $100,000, or was it an interest rate on a loan?
That's right. So it's it's effectively the opportunity. It's the cost of the lost opportunity of not being able to invest that elsewhere. So $100,000 that comes out of an account or some other asset means that they're not receiving a return on that asset. That's provided to the aged care provider, and therefore the cost of that RADs to the individual is the lost opportunity.
So, Professor, there's a sense of a Solomon-like approach to the perspectives of both sides in the answers that you've given as to what an effective, what an appropriate conversion rate should be. We've heard from some of the industry witnesses, some of the providers who gave evidence yesterday, fairly forcefully expressed evidence to the effect that pinning the conversion rate to what's in effect an interest rate or something akin to a yield on an instrument is likely to cause volatility, particularly in the current climate when yields are very low, it's going to undercompensate a provider. It's going to possibly tend to lead to a flight of elections away from RADs and into DAPs, and that might have liquidity implications, at least if it's repeated over on a mass scale over a long time. And that might be compounded by falls in property prices and lead to a bit of a run on RADs in a worst case scenario. But we've seen in the report of Frontier Economics that we mentioned a moment ago in part 7, a clear argument that an interest rate is an appropriate conversion rate. That is, an interest rate on an imputed loan is an appropriate conversion rate for a DAP, because that's what the economic function of lodging a RAD is. It's in fact to confer or provide an interest-free loan to the aged care operator, and Frontier have gone through a process of imputing both an expense and revenue stream by reason of that activity in the course of their economic analysis of returns done in another paper. So in the end, where do you come down? Do you say that in fact the interest rate approach is the more appropriate approach because a return on capital is already taken to be embedded in the quantum of the RAD, or do you say a WACC approach is fairer?
Yeah. So I would tend to suggest that an interest approach is probably the more appropriate approach. But at the same time, we want to ensure that the rate is set so, in some ways there is an equivalence for the individual, for the consumer, for the resident who's paying a RAD and a DAP. And, if there is a large difference, as I said, between a WACC and what they could otherwise receive, then there would be distortions. People will choose potentially a RAD if a DAP is too expensive, or vice versa. In terms of volatility, yes, there is volatility, but there's also volatility when we think about a WACC as well, because a WACC is just a composition of equity and debt, and the rates on equity and debt also change. So, I obviously haven't done the analysis, but it would be interesting to see what volatility there is between a WACC versus an interest rate. And then the final point I'd like to make is that the volatility in some ways can be mitigated by providers by adjusting their accommodation prices. So as the interest rates go down, obviously the DAP will also go down, but in some ways that can be compensated for by increasing accommodation prices.
Thank you very much. Can I turn now to a series of propositions on community supports and home care? The propositions are numbers 5, 6 and 8. Number 5 is a proposition that certain forms of community supports will be best funded through a combination of block and activity-based grant funding by direct agreement between the governmental system manager and the provider in question. And we have in mind here social supports, assistive technology, home modifications and respite care. What are your views on that proposition, FF5, Professor, and its extension to those categories of services?
Yeah, look, I mean, I agree. It could be funded through a combination of block and activity-based funding, but I also want to make the point that within that proposition and within the document itself, there's no reference really to other types of funding that could be used. So, for example, outcomes-based funding. I know that there are people out there who aren't big fans of outcomes-based funding, and indeed, we've seen in the hospital sector that outcomes-based funding is really difficult to achieve effectiveness. If you look at the literature, probably about 50-50, whether your outcomes-based funding model will actually improve outcomes. But in these studies, many of them have been undertaken in primary care and hospitals. It's not the same as aged care. And we know that aged care providers respond to financial incentives. So, from my perspective, I think that we should be continuing to explore outcomes-based funding models to see whether they can indeed induce some form of improved quality.
Thank you. Propositions 6 and 8 are for individualised bundles, and we have in mind here predominantly care at home, particularly perhaps the more complex or intense needs for people to receive care at home. There's an issue about exactly what the individualised bundle or package or budget should cover, and there have been various iterations of proposals ventilated during the hearing and during the previous hearing on home care. That needs to be read in tandem with FF8, which in effect caps out the funding available for care at home at on par with the care component of the funding that a person would be assessed to receive in residential care. What are your views on these matters, Professor?
Is this, are you referring to the proposition FF6 or FF8 or both?
Both in tandem.
Okay. Yeah, look, I tend to agree with those propositions. Aged care services can be funded through individualised bundles. we just look. I mean, I agree with the propositions. I don't see that there is any necessary reason why not to agree with them. Maximum funding amounts for care at home, proposition FF8. So I suppose my only response there is that there's a potential perverse incentive here if the provider were responsible for determining whether an individual receives care at home or in residential care. So from my perspective, I think the assessment should be undertaken by an independent assessor.
If the funding is equivalent, might that mitigate that perverse incentive?
Yes, that's true. I mean, well, I suppose then you have to though think about what is the provider delivering? Are they delivering both home care and residential care, i.e. both types of care, or are they just delivering one type? And if it's one type, then obviously a provider would probably want to ensure they keep that individual.
Yep. Thank you. Can I go to means testing? And I hope you've had a chance to reflect on our late addition to the propositions at FF20 in particular. It's that proposition that I wished to receive your opinion on.
Mm-hmm.
Are the principles for redesign of the means testing for user contributions towards residential care under that proposition suitable, do you think?
Yeah, I think so. So under that proposition, it really shows that there seems to be inequities in the way that people are asked to pay for their care in proportion to and accommodation in proportion to their means, their financial means. So yes, I agree with those propositions.
Thank you.
That proposition.
I want to now come back to this point about transition, transitional principles, and we'll ask that the principles that Royal Commission staff have prepared for a framework for transition and implementation be displayed. This is a document prepared by staff of the Royal Commission, not by yourself, Professor, but you've had a chance, I hope, to familiarise yourself with it. It's entitled A Framework for Transition and Implementation. Thank you. RCD 9999 0534 0001. And Professor, I understand you wished to make an addition to the principles, but subject to that addition, can I ask if you for your views on those principles? Perhaps the addition first.
Yeah. So my addition is really around ensuring that there is ongoing monitoring of the impacts of change on the sector. So within that document, there is a discussion on monitoring, but when you look at the explicit framework recommendations that are made, there doesn't. Yeah, second page. There doesn't seem to be a reference to monitoring. So I would probably like to see that more explicit. And the reason why is because large reform will result, hopefully, in large change. And within large change, there is potential for perverse behaviours to occur or outcomes that were unanticipated. And so I suppose what I'd like to see is an explicit recognition that any change, any reform process has a good quality monitoring framework around it. In particular, monitoring the quality of care being delivered, monitoring prices, and also monitoring access to services, because at the end of the day, we want to ensure that people have access to good quality care. And in some instances, if if the aged care sector does go through rapid change, that may not occur, and we want to ensure that that situation is mitigated.
Thank you. And one of the points that is raised, this is the second bullet point, is adaptive implementation. Can I just ask you, and this is really my final question, that monitoring that you've mentioned is a key use for that monitoring, that it would be made available to an active system manager or other manager responsible for implementation, so that they could refine and adapt iteratively to meet unforeseen circumstances. Is that really the utility of the monitoring?
Yeah, that's right. Yeah, so making sure that we understand what changes are occurring within the sector as it transitions from one environment to another. In terms of adaptive implementation, yes, I think that's important, but we also want to make sure that that doesn't allow the fundamental principles of reform to change. It doesn't allow, some key reform blanks to change that may then have a flow-on effect to other reform mechanisms. So there has to be a very good understanding of how changes that are occurring and will occur through reform interlink, because you may change one piece of reform and that may have flow-on effects to other parts of the system and other parts of reform.
I have no further questions.
Thank you. Yes, thank you, Professor. Thank you for the amount of effort that you've put into your statement and for being available to help us think through these difficult questions. So I formally excuse you from further attendance, and thank you very much for having assisted us as you have.
Thank you.
Now, Mr. Gray, it's 2:30. What time do you want to resume? At 1:45, is that right?
If we could resume at 2:30, I might make some brief remarks about what you've heard without intending to be comprehensive, and then we've got another witness at 3 p.m, and that will then be the end of the hearing. That will allow you, the commissioners, to keep whatever travel arrangements you might have made. That witness at 3 p.m. is an overseas witness and can't appear before 3 p.m.
Yes.
While I'm reshuffling.
The only concern is the end time. Will you have enough time so that we will be able to start the 3 p.m. witness at 3 p.m. so that you will be able to finish with him at 4 p.m?
Yes, and that's because the remarks I intend to make are in no way a comprehensive closing of the hearing. There's simply some remarks about mainly housekeeping matters and a very brief overview of what's transpired.
If you need to start a bit earlier than we can do, just that we don't want you to be squeezed at that stage and then squeeze the others.
Well, we could start at 2:15, but there'll probably then be a short break between the end of my remarks and calling the witness, but I suppose that's fine.
I think we might do that to be safe, Mr. Gray. 2:15.
Thanks, Commissioner.
The Royal Commission is now adjourned until 2:15 p.m. Commission is now in session.
Mr. Gray?
Thank you, Commissioner. We wish to call one more witness, Dr. Peter Bax, a health economist from the Netherlands. Commissioners, you'll recall evidence at the home care hearing 3 weeks ago on the Dutch aged care system from Professor Jos Scholes, a professor in old age medicine. Dr. Bax's evidence will complement Professor Scholes' evidence by providing details on financing issues. But due to the time difference between here and the Netherlands, I propose to call Dr. Bax no earlier than 3 p.m. In the meantime, I wish to use the available time now to make some very brief closing remarks about this hearing. Over the hearing, we've tested 19 propositions concerning funding arrangements and 8 propositions concerning prudential regulation and financial management oversight. And the evidence has also addressed some potential long-term financing options and raised some issues concerning capital financing of accommodation-related investment in residential aged care. However, our examination of those matters has been somewhat selective. We note again that a separate consultation is occurring on capital financing issues, and submissions are invited on such matters, including RADs, DAPs, capital grants and related capital financing matters. Today marks the end of this public hearing element of the inquiry into these matters, but more remains to be done, Commissioners, before the Council assisting team can put its recommendations to you on the matters raised in this hearing and the broader matters concerning funding and financing, which may well affect your final recommendations. We intend to formulate our proposals on those matters following this hearing and to present them to you in about a month's time. In my remarks now, I will in essence deal with some housekeeping issues, and I'll identify to interested parties some additional issues which arose and which were not covered by the propositions we formulated in the lead up to this hearing. And without limitation to the points I'll mention during these remarks, all parties, of course, which received grant of leave to appear in this hearing may make written submissions on anything raised during the hearing, provided they do so at a time to be stipulated by you, Commissioners. Now, I understand a direction has been prepared for your consideration. We would be proposing that submissions from parties which received leave to appear in this hearing be made by no later than the 6th of October 2020. The main themes around which the hearing was structured were as follows. First, funding adequacy, including the deterioration in funding performance of the sector, its likely causes and how to avoid them in the future, and in particular, for the future, ensuring that aged care is funded to a level that's well calibrated to meet needs on both the level of the individual receiving care and in an aggregated sense system-wide. Now, in this regard, Commissioners, we of course tested propositions FF 1, 2, 3, 4, 5, 6, 7, 8, 9 and 11, 10 being the interim proposition about raising staffing levels subject to acquittal of staffing level related funding. We tested those propositions with a large range of witnesses, including providers of various different scale, the Secretary and senior officers of the Department of Health, key analysts and industry observers and experts such as Professor Woods and Professor Cutler, Professor Piggott. There was a broad consensus for the establishment of independent pricing of subsidy levels and certain price caps in what would amount to a revolution in the fundamentals of aged care funding for the future, that insertion into the system of an independent pricing mechanism. And we heard from the CEO of the Independent Hospital Pricing Authority, Mr. James Downey, about how a similar model of independent pricing in aged care to the one he applies in hospital funding could be achieved. One of our witnesses was Professor Kathy Eager, whose team's work has been, of course, instrumental in developing a case mix model for residential care, which could work in combination with independent pricing. Moving through the themes, next was identifying the best options for stable long-term financing for the system. We addressed this through evidence from the Honourable Paul Keating and the Honourable Peter Costello, Dr Ken Henry, Professors John Piggott and Michael Sherris, and the Secretary to the Australian Treasury, Dr Stephen Kennedy, and his colleague, Ms Jenny Wilkinson. We heard evidence of the Japanese aged care system and its employment of long-term care insurance to provide about half of the public financing of aged care in that country, which of course is a country that faces significant challenges in this respect by reason of its steeply ageing society. And soon after I've concluded these remarks, as I mentioned at the start, we expect to hear further evidence of a comparative and international character about the financing of aged care in the Netherlands. Next, in terms of the themes, the hearing gave attention to the principle of attaining an equitable balance between public financing and contributions from the individuals who are receiving the services, and doing so in a way that doesn't impede access to those services. There's some important context to mention here, Commissioners. Pursuant to leave granted yesterday, we've added 2 documents to the General Tender Bundle at tabs 133 and 134. And these documents summarise Australian government expenditure on aged care by comparison with other services for older people in Australia. These 2 documents record that in 2017-18, direct expenditures by the Australian government on older people accounted for a little over 21% of all direct government expenditures. Direct expenditure on older people was almost $98 billion. $98 billion. This figure is not just aged care. It includes expenditures on income supports for older Australians and medical services. And one can also analyse the figures by reference to tax expenditure foregone by reference to superannuation, for example. The new documents in the tender bundle also record that expenditures by the Australian government, state and territory governments and individual contributions to aged care amount to over $30 billion. And of this, individuals directly contribute a bit over $5 billion. The private component of aged care financing may not, in a sense, be large by comparison with the public component, but still significant, and it's significant for reasons other than mere size. Consumer contributions are known to improve consumer engagement and therefore to put pressure on quality outcomes and the like. They also play an important role in promoting the objective of intergenerational equity, a concept explained by Professor Piggott, as well as vertical equity, another concept he explained. The retention of user contributions as a piece of the architecture of the aged care funding and financing system. The retention of those contributions towards aged care costs, including co-payments for the costs of care, received widespread support from the witnesses called in this hearing. No witness in terms opposed the imposition of some form of user contribution. However, of course, reform of the means testing arrangements is sorely needed, and this was repeatedly emphasised by the witnesses. The evidence of the consumer peaks, Treasury and Professors Woods and Piggott is particularly important on these matters. And we must remember Mr Costello was, while being very scathing really of the administrative arrangements currently in place for means testing, was, I think, supportive in principle of the concept of means testing, provided it's done in a way that isn't so burdensome. Mr Keating had a different approach altogether. He proposed post-funding of aged care by establishing loan accounts, which would be settled upon the decease of the person who's received Commonwealth subsidised aged care from their estate. This, of course, is another form of means testing, although not affecting the person during their life. It involves a means tested approach in the sense that if the estate doesn't have the means to meet the debt, then the debt will not be satisfied. During the hearing, we advanced propositions for user contribution and means testing reform in the shape of propositions 13, 14 and 15, 15 being the proposal that there be no fees at all for respite, 16, 17, and in the alternative to an element of 17, 20 as well. So we're raising 2 propositions in respect of contributions to care for residential care. One, that there should be no contributions required for the cost for the care component of the costs of residential care on the basis of the universality principle, that these are services of a kind to which the Australian community would expect that people will have access for free. But in the alternative, and in light of the sentiments expressed by many of the witnesses, we have in the alternative to that measure proposed means testing reform in respect of both the care and accommodation components of residential aged care funding. Commissioners, much remains to be done in developing these topics. For example, further consideration of them will involve exploration of fair and appropriate measures to bring the value of the primary residence into the means testing arrangements to a greater extent than at present, while not prejudicing the rights of others who share the home. Moving through the themes of the hearing next, while calibrating funding to needs, the system must include features ensuring accountability for expenditure of that funding on the purposes for which it's been provided. And those measures must be proportionate. They must take into account administrative burden and the need to retain flexibility in order to foster innovation. We don't want to stifle innovation by inflexible requirements in this regard. On these topics, we've tested propositions FF12 and PR1. These propositions were in the main broadly supported, although many witnesses expressed interest in how the detail of those propositions might be fleshed out. It must be said that some witnesses expressed concern at the imposition of the acquittal obligation foreshadowed in FF12, depending on the precise content of any such acquittal obligation. Next, Commissioners, we examined reporting and prudential measures to protect against financial risks that might endanger continuity of services to the people who need aged care, some of whom are very vulnerable, of course. That question of ensuring that the system manager or prudential regulator, or both, understand risks of a financial nature that are on the horizon is critical to safeguarding the recipients of care from harm to their interests and welfare. In a way, the potential Commonwealth exposure via the guarantee scheme for refundable accommodation deposits is a secondary issue when it comes to financial risks. But financial risks can, in some cases, potentially place Commonwealth guaranteed loans at risk as well. Now, we've tested in this regard all of the PR propositions 1 through to 8. Our inquiries in our submission have left no doubt, Commissioners, that the current prudential regulation and financial oversight arrangements are inadequate to ensure the sustainability and stability of the aged care system. There's a pressing need for reform in this area. In the words of Mr. J. Smith of the Department of Health, the current prudential framework is not fit for purpose and requires fundamental reform. Mr. Callaghan considered that the prudential regulation regime needed to be more strongly focused on ensuring the stability of services provided to older people. We also note the evidence of Mr. Corduroy agreeing with the propositions but emphasising the importance of liquidity as the major indicator of prudential risk according to the work that he's done. Now, in terms of the themes of the hearing, this final theme only received some attention towards the end of the hearing, and it's going to need to be developed, including by reference to material that I'll be able to tender in a moment. The theme was transition and implementation and the principles that should govern transition and implementation. I raised these with Professor Cutler in the last session just before lunch. They should include a proactive and accountable role for a governmental body in steering the transition and a carefully constructed sequencing of the reforms. The transition must be accompanied by monitoring, according to Professor Cutler, monitoring of the quality of care delivered as well as prices and access to services. And very importantly, it must be capable of adaptation to unforeseen developments while maintaining its direction towards clearly defined major reform goals. Commissioners, I omitted to tender the document that I raised with Professor Cutler, and I'll do so now. It's RCD 9999 0534 0001, and I ask that that be accepted as a freestanding exhibit.
And Exhibit 21-26.
Thank you. Commissioners, although we'd not formulated any particular proposition covering the topic of transition and implementation, we did raise one transitional proposition for the improvement of staffing in residential aged care funding arrangements. That was FF10. And at the home care hearing 3 weeks ago, certain of the hearing propositions in that hearing were of that nature. And we've now identified the need for additional transitional measures of the kind identified by Mr. Corduroy of Stuart Brown, and the need to consider those. And we'll be working on those in the course of formulating our final proposals for your attention, Commissioners, in about a month's time. We'll submit those to you when we present our recommendations on other matters at that time. At that time also, we intend to address you on the need for further system governance arrangements which would facilitate a proper implementation of the reforms that we'll be raising for your consideration. In many ways, the home care hearing 3 weeks ago or so and this hearing have been complementary hearings, certainly on the issues raised relating to the funding arrangements for home and community care. Your consideration of funding arrangements for aged care provided in the community must be closely informed by the issues that were addressed in that hearing, including those details about service arrangements that were traversed in that hearing. There's an outstanding piece of housekeeping from that hearing I'll now attend to. The propositions which were provided to witnesses in that hearing were in a document dated 7 August 2020, and that was at tab 1 of the general tender bundle for that hearing, Exhibit 20-1. As I explained at the outset of that hearing, shortly before that hearing, we, the council team, assisted by all the staff of the Royal Commission, altered a detail of our proposed new service arrangements for care in the home. And that alteration was set out in a document which was provided to witnesses shortly before the hearing and was reproduced at tab 59 of the tender bundle in that hearing, and I've been taking witnesses to that document ever since, including today. We've now prepared an amended version of the proposition that's affected by that change. The proposition that was affected by that change was proposition HC2 in the home care hearing. And for the sake of completeness, we would like to put that amended version of HC2 on the record and tender it now in this hearing. It could be added as a new tab to the general tender bundle at 136, if the Commissioners please. Thank you. While I'm on the tender bundle for this hearing and dealing with housekeeping matters, can I just put on the record the fact that there are documents at tabs 91 and 92 relating to aged care expenditure constraints. It's a document I've taken you to in another form, Commissioners. 91 and 92 are the document on expenditure constraints and the accompanying spreadsheet workings. The Commonwealth responded to that document, took issue with certain aspects of it, and we generated a new version of that document in the accompanying spreadsheets. And the new version is at 114 and 115. So the old version is in the tender bundle and remains so at tabs 91 and 2. The correspondence from the Commonwealth is also in the tender bundle. And the new versions of those documents, which are the ones to which I've been taking you Commissioners during this, taking you to during this hearing, are at 114 and 5. Commissioners, there are additional tenders on the topics of system governance and provider governance I'd wish to make. These, of course, were not traversed during this hearing, but this is in effect our last opportunity to tender them into evidence before you. And I'd now seek to tender a bundle of 6 signed witness statements, which I can refer to as the System Governance Tender Bundle, comprising witness statements from the following individuals: Associate Professor Gemma Carey, Robert Bonner, Professor Halmar Sverrisson, Professor John Polaires, Professor Gary Sturgis, and Mr. Mike Callaghan. And I tender the System Governance Tender Bundle. Perhaps that should simply be given an exhibit number referable to this hearing.
Well, that would be 21-27.
Thank you. And I'll now tender 5 signed witness statements, which I'll refer to as the Provider Governance Tender Bundle, comprising witness statements from Ms. Liesl Wett, Ms. Anne Cross, Professor Graham Samuel, Ms. Suzanne Varden, and Ms. Janet Anderson, the Aged Care Quality and Safety Commissioner. I tender that bundle.
That's 21-28.
Thank you, Commissioner. For the remainder of these remarks, I'll confine myself to points that are either potentially outside the scope of the propositions we advanced during the hearing, or that, although they might be within the scope of the evidence you heard, they clearly call for a responding submission from a party with leave to appear on perhaps what might be loosely regarded as a procedural fairness ground. I probably need not specifically and in detail identify matters in the latter category, but I'll do so on 1 or 2 points in any event out of an abundance of caution. The points that might require an answer, and I won't beat around the bush, the answer would be from the Commonwealth, relate to findings we might invite you to make on the question of what led to what's said to have been funding inadequacies, particularly in residential aged care. You've heard significant persuasive evidence in my submission that aged care providers are being stretched beyond their limits by a funding system designed to, in effect, give priority to the Australian government controlling its expenditures on fiscal grounds. Papers prepared by staff of the Royal Commission show a trend of expenditure constraints imposed by government across the aged care system, tabs 114 and 5. The evidence before you identifies constraints that apply in each of the major program streams, although it's perhaps been most acute in residential care by reason of those rather dramatic events concerning indexation pauses. In the Commonwealth Home Care Support Program, there are limitations on the issue of grants, the scope of activity which is funded under those grant agreements, and Dr. Panter perhaps gave you the most important evidence of all in that regard just this morning about the inadequacies of simply rolling those over the last 2 grant periods. In the home care package program, the Australian government limits its expenditure, of course, through controlling the number of packages which are issued in accordance with the target provision ratio. And commissioners, you've heard a great deal about this. You've heard a great deal about the long waiting lists. Removing those waiting lists has, the cost of removing those waiting lists has been quantified in the billions of dollars. The planning ratio, or the target provision ratio, also applies as a cost control mechanism in residential aged care. And even more significantly, perhaps, given the fact that there is now some capacity on average in residential aged care by reason of the occupancy rate having dropped a little, costs in residential aged care are controlled through the Australian government's indexation of the prices that are paid to residential aged care providers through the Aged Care Funding Instrument, ACFI. And the method of indexation that's applied to the various 64 potential levels of funding under ACFI is known as COPE, and it's been in place since about the 1990s. The Department of Health's evidence is that the combination of factors which comprise the rate at which ACFI subsidies increase under that indexation method are inadequate to keep up with the costs of providing residential aged care. All witnesses agree on this point. In other words, the cost of providing the current quality of aged care is rising faster than the rate of indexation of the price paid for it by government. And the effect of this must be, even without any improvement in quality outputs, to reduce the ability of providers to provide care in accordance with the current standards. they're in effect being squeezed and must choose between financial viability and providing the level of care that's the minimum standard required to support their residents, an impossible situation. And added to that, there've been, of course, the 2 periods where government paused or froze the indexation of ACFI altogether, first in 2012-13 and the second in about 2016-17. And the Department of Health has also acknowledged the serious financial implications of those pauses or freezes. In a response to a notice to give information or a statement tendered at this hearing, the Department of Health has said that in 2012-13 the freeze was to address concerns over overclaiming and to bring growth more in line with estimated sustainable funding levels, and that the 2016-17 freeze was said to be because ACFI claiming growth was again higher than expected. Witnesses from the department, including Dr Murphy, the Secretary, claimed that the indexation freeze was justified on the basis that there was overclaiming. This is said to be determined on the basis that the ACFI claims rose faster than expectations of acuity in residential aged care. There does not seem to be a connection in our submission between the reasons for the increase in ACFI costs and the decision to freeze indexation. Certainly not a reasonable connection. The freezing of indexation created a challenge for every provider, not just those who may have been the subject of the allegations of overclaiming by the department. A challenge for every provider to try to provide the expected quality of aged care with less and less money to do so. The department witnesses asserted that the pauses in indexation were appropriate responses, these are perhaps not the exact words, but this was the gist of the evidence, to appropriate responses to abuse of the funding model or the use of it in an unintended way by the aged care sector. We submit that characterisation is insupportable. If there was overclaiming, then the appropriate response would have been investigation and, subject to the results of any such investigations, targeted sanctions action against particular providers found to have been overclaiming. But the response from government was not limited to using regulatory tools to investigate or even to educate industry about this serious issue. Instead, the department's position was, in effect, a form of collective sanction, and this was inappropriate. We say the better explanation for what occurred and a more rational explanation for the collective measure that was taken was simply that the Australian government was unwilling to meet the rising costs of the system it had set up. When Dr Murphy said that the huge increase in costs at the time would have certainly placed an unexpected fiscal pressure on the government, and that was at transcript 9449. In saying that, Dr Murphy was tacitly acknowledging that fiscal motivations were at the heart of the action taken by the government. This fiscally driven decision seriously affected and continues to have seriously affected the financial performance of providers, putting pressure on the quality of residential aged care. Dr Mellors said that the current funding levels were inadequate to deliver the current level of quality of care to older people in Australia, let alone the kind of care that we would all like to provide. Her comments were reflected in a large number of other statements in evidence before you at this hearing, Commissioners. I've made these remarks because I wish the Department to be clearly on notice that we are considering proposing findings to you on these matters, Commissioners. The Department and any other party with leave to appear might wish to make responding submissions on the matters I've just mentioned. The more important point, perhaps, is not to repeat the mistakes of the past and to establish a lasting solution which restores trust and instills confidence. Confidence is critical on all sides. Confidence on the part of the community so that we can all prepare for old age and for our loved ones' old age without fear of the future. Confidence on the part of providers so that proper investment is encouraged. And confidence on the part of government in accountability for the expenditure of public money on proper purposes. Confidence on the part of a dedicated and skilled workforce. And confidence from all that high quality and safe care will be the result now and on into the future. The time has passed for the determinations of subsidy amounts to be paid to aged care providers to be left in the hands of an agency with diffuse policy responsibilities, or to be given cursory attention or attention at long intervals from time to time. Aged care funding is as complex as it is expensive. It deserves the specific focus of a specialist statutory body. The Secretary of the Department of Health supported our proposition in support of an independent pricing body, but considered that it should only make recommendations to government rather than binding determinations of funding levels. And that's a matter on which we invite submissions, together with any other issues raised by the evidence in the proceeding. And it's a matter on which we intend to address you in a month's time. Numerous witnesses who appeared before you in this hearing agreed that there's a need for an independent authority to at least make transparent recommendations to government about the subsidies that providers are to be paid for the aged care services they supply. The former chair of the Aged Care Pricing Authority, Mr Callaghan, emphasised that the independent authority would need to be trusted by both government and the aged care sector, and you heard similar views from Mr Downey, the CEO of the IHPA. We note that Professor Kathy Egar's evidence was that she supported the creation of an independent pricing function, but not a new authority. She considered that, for example, it would be appropriate to add aged care pricing to the functions of the IHPA, rather than creating a new statutory agency. The providers who gave evidence yesterday all supported the introduction of an independent price setting authority, and the banks on yesterday's panel noted that to the extent that independent pricing would attract additional investment to the sector, then they'd support its introduction, although there were some concerns that it could limit profitability depending on the scope of its functions. Commissioners, of course, in case this hasn't been obvious, we are proposing that the pricing body, whoever it may end up being, will exercise functions of a far broader nature than the functions currently exercised by the AHPA. Those functions would extend to other aspects of potential economic regulation. We also accept points made by the likes of Mr Callaghan that it's necessary to give very careful attention to a precise description of the responsibilities and functions of the body and to set its objectives. Interim measures, Commissioners. There's an urgent need for additional funding to be provided before we're going to be able to have established an independent pricing function, and our proposition FF10 is apposite in that regard. And once independent pricing is established, it'll supersede all aspects of the current process of determination of funding, for example, the 64 levels of ACFI funding, including their indexation. But because independent pricing will take some time to establish, an interim measure is justified forthwith to replace at least the COPE indexation method and to mitigate its accumulated effects. This is particularly urgent to ensure the financial viability of residential care providers in regional and remote areas. Commissioners, we're considering additions to the propositions we've tested in this hearing in this regard, including some that have been advanced by Mr Corduroy to address this point. For example, Mr Corduroy proposed that the Australian Government provide a subsidy to all providers of residential aged care to effectively amount to an increase of the base amount for the basic daily fee by about $10, or exactly $10 per bed per day for all residents. Mr Corduroy also proposed, and this was one option for amendment of the COPE indexation arrangements, that indexation could be based on the annual Australian Bureau of Statistics wage price index plus an add-on of an additional 1% to allow for award and enterprise agreement increases for aged care workers. Another possibility might be that the indexation method could be amended, Commissioners, to compensate for the fact that sector wages in this sector are below average wages. Again, these arrangements could continue until independent pricing is established, and once that authority is established, then its arrangements should supersede the need for indexation. indexation will in effect be built into what that function performs. In addition, given what we've heard about the financial viability of providers, especially in regional and remote Australia, the Australian Government should make immediate amendments to the viability supplement to ensure it's better targeted to the costs of service delivery in these areas. And this was a matter raised in the Mildura hearing. I beg your pardon, the Mudgee hearing. This could be achieved by ensuring that the supplement is calculated as a percentage of the daily ACFI subsidy rates based on remoteness area and adjusted such that the loading amounts are increased per remoteness area. Again, this arrangement could continue until independent pricing is established. As I mentioned a minute ago, Commissioners, the role of this body is not confined to pricing. On the basis of our submissions, in particular FF3 and 4, the role would include evaluation, assisting evaluation of the depth of so-called markets or pockets of supply of services, and assisting the system manager to intervene appropriately where there are thin markets. Commissioners, we anticipate you'll be greatly assisted by the report of Professor Menezes and his evidence in deciding the approach that you ultimately recommend as to when economic regulation should be applied. And Professor Cutler has now added to that body of evidence. Both professors' evidence supports the need for lighter touch regulation in respect of certain aspects of the services in question, such as accommodation charges for unsupported residents. And there are a range of regulatory measures that are available: market conduct regulation, price monitoring, and at the heavier end of the regulatory spectrum for care and living costs in the residential sphere, price capping. Another point on which we will be working on further development of our propositions is the service and funding arrangements for support and care in the community. In this hearing, as in the last hearing on home care, we of the Council Assisting Team have been testing with witnesses a number of propositions on that topic. Professor Egar made the point, Commissioners, that you can't conceive of funding and program design independently, and we agree. It's a relationship which definitely flows both ways, and no more so than in the case of community and home care. We tested propositions FF5, 6 and 8 in this hearing. FF5 describes the service types which should be block or activity or a combination of those funded on that basis. FF6 describes the services which would be funded by individualised budgets. And there have been further iterations of proposals in that regard, and we need to take those into account when we make our submissions to you in a month's time. FF8 describes a new approach to setting the maximum amount of funding available to a person staying in the home, and that received broad support. In the home care hearing, we tested a set of service arrangements for home and community aged care, of course, and I've referred to the exhibits and mentioned the new and amended form of proposition HC2, which I just noted had been added to the tender bundle. We also tested transitional funding related measures in HC1, HC4D and HC6F. In this hearing, as well as testing those funding arrangements, I'll withdraw that, Commissioners. I think I've already covered that. And without in any way diminishing the importance of the other propositions we tested during the hearing and the evidence of the many witnesses who contributed, I'll conclude my remarks at that point. We have about 5 minutes or so to go before Dr. Bax will be available. Would you mind? He's available now, I'm told. So that's
unsurprising. It's only 3 minutes away, so we may as well get straight onto it.
Thank you. I call Dr. Peter Bax. Commissioners, I'd seek to dispense with any oath or affirmation for this witness as is
Yes.
overseas. Dr. Bax, can you hear me? It's Peter Gray, counsel assisting.
Yes, I can hear you.
Thank you, Dr. Bax. Is your full name Peter Bax?
Yes, that's right.
And what is your current role and your institution?
I'm an associate professor.
And is your institution Erasmus University Rotterdam in the Netherlands?
That's correct, yes.
Thank you. What's your research area and your expertise?
I study the impact of healthcare financing, and I focus on long-term care financing, which you call aged care in Australia.
Thank you. You've created a document for us which is in the nature of a submission entitled 3 Aspects of the Dutch Experience with Financing Aged Care. I'll just ask that it be displayed. AWF 680 00032 0001. And is that a copy of the submission you sent us?
Yes, it is.
And did you prepare that submission in response to the Royal Commission's consultation paper 2 of June 2020, Financing Aged Care?
Yes, I did.
Thank you. Are the opinions in this submission opinions that you sincerely hold, Doctor?
Yes, I do.
Thank you. Yep. Could you please briefly outline the different groupings of publicly funded supports and long-term care services available for older people in the Netherlands?
Yes, I could. So the biggest one is the Chronic Care Act, which finances care provided. So in this case, that's nursing homes. Then there is the Health Insurance Act, which is the social health.
If you just hold on a minute, Dr. Bax, we've just got an audio issue. We'll just see if we can sort it out. Do you want to just say something, Dr. Bax, and we'll see if the sound's coming across now.
Is it better now?
No, it's still very faint. Please bear with us.
And what about now?
Yes, that's
Is
much
that better?
Yes,
okay,
that's
then we
good.
got it back.
Thank you. So back to the different groupings of publicly funded supports.
Yeah, so there's the Chronic Care Act that finances institutional care, so care in nursing homes. There's the Health Insurance Act that pays for home care. And there's the Social Support Act that pays for social support, so that includes domestic help and activities to maintain a structured daily life for the elderly. The first two, so the Chronic Care Act and the Health Insurance Act, these are both social insurance that is mandatory for everyone to enroll in and to and that essentially pays for the long-term care for everyone. The third one is tax funded, so the Social Support Act that is tax funded and that is administered through the local governments, the municipalities in the Netherlands.
Thank you. I just want to ask you about a particular feature of funding provided under the Chronic Care Act, or perhaps you might describe them as benefits payable under social insurance under the Chronic Care Act. Is it true that a person receiving an assessment as being eligible to receive care in an institution under the Chronic Care Act may choose at their discretion to stay at home and spend that same budget on care that they would have received in an institution and spend it in staying at home?
Yes, that is correct. Although they don't get the full budget, but they get the same amount of hours of home care. So they get the same amount of hours of care that they would have gotten in the nursing home, but they now get it at home, and which may have different expenditures.
Okay, that's interesting that it depends on the amount of hours, not on the euro value figure for the budget.
That is correct.
So it might might it be more or less expensive to purchase that care, but the main thing is that the same hours are delivered? Is that the point?
That is right, yeah.
Okay, thank you. Has that measure been evaluated for its effectiveness in maintaining the health, well-being of people and avoiding institutionalisation?
No, it hasn't. It has been in place for many years. I don't know when this started, but it has been there for quite some time. I did study a fairly similar aspect of the system, which was whether people who were eligible for nursing home care, some of them, who are at the threshold of being eligible, close to being eligible for nursing home care. For those who were just eligible, I compared them to those who were just ineligible. So those who would stay home mostly, and the others would mostly go to the nursing home. We compared the spending in the next 2 years for these two groups. And what that research showed was that these, if you added up all the spending, so all the home care, all the nursing home care, but also the medical care of these people, that was essentially the same in the Dutch case.
In either setting? The same whether they stayed at
when
home,
they stayed home, yeah,
just below eligibility, or whether they went into an institution because they were just above eligibility.
Yeah.
Okay, thank you. In respect of these groupings of services, let's focus on the two that are financed by social insurance: care in the home under the National Healthcare Insurance Act, and care in institutions or taken at home at the election of the care recipient under the Chronic Care Act. What are the financing arrangements that apply to raise the money that's needed for funding those services? Let's start with National Healthcare Insurance Act.
Yeah, in the National Healthcare Insurance Act, there's premiums that people pay, and part of the premium is income dependent, so that is taken from the earnings, from someone's earnings, and then there's that is the same for everyone with the same income level. And then there's the second part, which is called the nominal premium, which is set by the health insurer that someone chooses. And that health insurance, that premium that is paid directly to the health insurer, that is the same for everyone who is enrolled in that health insurance plan.
And is that social insurance scheme for national healthcare or under the National Healthcare Insurance Act essentially privately managed by private insurers, and that in that respect there's a difference between that insurance scheme and the insurance scheme for the Chronic Care Act?
Yes, so in the National Health Insurance Act there's private entities that act as insurers, whereas the Chronic Care Act, that is a public scheme with regional offices that are part of the government that organize. No, sorry, that is not entirely correct. But there's the main difference is that there is competition, so someone can choose which health insurer they have. But in the Chronic Care Act, you cannot choose which regional office organizes the care for you, because you live in a certain region and there's one office in that region. Okay.
And so in respect of the, in effect, privately insured National Healthcare Insurance Act social insurance scheme, does the government have to take measures to equalise risks so that policies can be granted or issued by the private insurers to anybody in the community without doing a risk assessment of those individuals?
Yes, that is right. So these private insurers, so in the National Health Insurance Act, these private insurers, they have to accept everybody who wants to be insured through them. But of course, the expected costs for these people are not the same at all. to give these health insurers the incentives to contract high quality but relatively low spending care for everybody, there is the risk equalization system that aims to give proper incentives to health insurers to take care of everybody who wants to be insured through them.
And in the Netherlands, is that principle of, in effect, requiring the insurer to provide the same terms to anybody approaching them for a policy, is that known as community rating or community risk rating, or is that?
Yeah, that's community rating. Yeah.
Community rating.
Yeah. So, but that also means that they have to charge the same premium to everybody. So that essentially goes a step further. So it means that you not only have to accept everybody, but that you also have to set the same premium for everybody.
Yes, thank you. What about the scope of private co-payments or co-contributions by the users of the services once a benefit is granted under either of these two social insurance models? What are those arrangements for private co-contributions, co-payments, whatever one wishes to call them?
Yeah, so in the Chronic Care Act, there is an income-dependent co-payment. So people pay a part of the spending on the nursing home care that they use. But how much that is depends on their income and on the amount of assets that they have. In the National Health Insurance Act, in principle, there's a deductible of about, I believe, 385 euros, but that does not apply to GP care and to home care, which is which is the aged care that is financed through that scheme. So there's no deductible there.
And is that deductible applicable in any particular period, or is it just once in a lifetime when the person commences using the home care?
It's annual, but once again, it does not apply to the home care. So it does apply to, for example, hospital care, but not to the home care that someone.
Oh, I'm sorry. Yeah. Thank you. In your submission, you refer to one of the benefits of social insurance as being that insurance generates value as it creates financial certainty about one's future. It reduces the need for large precautionary savings and means that people may spend this money on other things during their life. And you also refer to the need for any co-contribution or co-payment regime not to negate that benefit. What would be the guiding principles for designing a co-contribution regime so as not to negate that benefit? Is it simply a matter of the size of the co-payment?
So it's a matter of the size of the co-payment, but it would also be best acknowledged that there are differences between people and how much risk they can bear. So of course, someone with a high income and possibly a large amount of rather liquid assets would be able to bear much more financial risk more easily than someone who doesn't have these financial resources. That's one, and the other one is that there is that the insurance system should aim to put a limit to what someone can expect to spend on elderly care at the end of their life. So if there's some sort of stop loss, that would definitely be another feature that would be helpful there.
And is another word for a stop loss like a lifetime or an annual cap?
Yeah.
Perhaps both.
Yeah. That's what I mean.
Are there both annual and lifetime caps in Dutch social insurance for home care?
No, there's definitely no lifetime cap because everything is done on an annual basis. But there is a maximum co-payment per year. Yes. So
and approximately what is that maximum co-payment income or asset dependent or both?
Yeah, both.
Okay. And do you know off the top of your head how high it goes? Does it as a percentage of assessable assets?
No, I can't say that from the top of my head. I do know that if you are in the highest income and asset class, it is going up to roughly, I believe, 25 to 30,000 euros per year.
Okay, and is that approaching the actual full cost of the care services,
No.
or are they? No, it's
No,
a lot
not
more.
at all. No, that's a lot more. Yeah.
So are we talking about what? It's only about a quarter?
From the top of my head, so the nursing home costs, the price of a nursing home depends on how much care you use there, and for the, I believe it's for the lower, for sort of the lower amounts of care that you may receive in a nursing home, it's about 80,000 euros. So in that case, it would be about a quarter. Yeah, but it's probably higher than that. Yeah.
Yep, thank you. And so what you've just explained to our hearing about the caps, the annual caps, is that restricted to Chronic Care Act social insurance for institutional care, or is it the same for National Healthcare Insurance Act care in the home? Is there also a cap in that?
No, there's no cap there because there's no. I mean, that is fully paid through the national health, through the health insurers. They pay for 100% of the costs, so there's no cap. Yeah, so there's no cap there.
Thank you. Of course, you made that point before. Now, is home care? I just want to ask you a few more details about National Healthcare Insurance Act benefits and the system of financing it. You made the point that home care is in effect covered by the same insurance scheme as healthcare is, and you've referred to GP visits and the like. But it seems that there are different contribution rules, different user contribution rules, depending on different service categories. So I think you said GP visits have a contribution.
Everything that is called sort of first line of treatment, so GP care and home care, they are exempted from the deductible. But the other services, such as, for example, hospital care, there the deductible applies.
Pardon me, I got it in the wrong way. But so that's interesting. There's a concept of first line response.
Yeah.
And the deductible doesn't apply. But then
that is correct.
What's the philosophy for applying the deductible to hospitalizations? What's the reason for that design feature? Is there a rational reason for that?
I'm not sure what the intention was, but my understanding is that it encourages people to seek as much treatment from their GP and at their home. So sort of the relatively seeking the first line of treatment services, they require relatively few resources.
I see.
So of course, spending treatment in a hospital is much more expensive than treatment by a GP, for example.
And it's consistent with that principle that there therefore is this contribution regime, albeit means tested and albeit subject to an annual cap for institutional care under the Chronic Care Act. Is that a fair summary?
Yeah, it is. Yes.
Yeah.
It's never designed that way. I mean, it has historically grown that way, but yes, that is how it is now, and that is correct.
Yep. Can I just ask you a bit more about the private insurers under the National Healthcare Insurance Act social insurance scheme? We did ask Professor Skoll some of these questions, but you're the financing expert, so I'll ask you. Approximately how many insurers are there, and is there essentially free choice, irrespective of region, to choose any one of those insurers you wish?
Yes, so there are 21. There are 21 health insurers that are that come from 11 concerns. But I must say the four largest ones, they capture about 85% of the market. So there's four really big ones, and then there's a number of smaller ones. But everybody is free to choose. Everybody in the Netherlands is free to choose from each of these. Yes.
Thank you. And I suppose this is probably a dangerous question to ask, but if it's possible to answer it briefly, that'd be great. What is this, generally speaking? Is there a particular structure of these entities? Are they mutual funds?
Yeah, my understanding is that some are publicly owned company, are private companies, and some are mutualities. Yeah, mutual funds.
Okay. And was the introduction of, in effect, private provision of insurance arrangements subject to that risk equalisation measure is this a recent thing, a recent innovation?
The health insurance, so the National Health Insurance Act started in 2006, and home care was transferred from the Public Long-Term Care Insurance Act to National Health Insurance in 2015.
And was it only at that point that long-term care became subject to private insurance arrangements?
Yes.
Yep. And has the effect of that transition five or so years ago been evaluated? Has it been a success on any particular metrics?
No, I tried to evaluate it with some colleagues last year, but we didn't get really far. I mean, I can't say if it for example saved costs. I don't know that. No, it turned out to be too complicated.
Okay. Now, can I just ask you a bit more about this division of the setting of the premium in social insurance for home care under the National Healthcare Insurance Act? Division of the premium into this fixed component that's, I think, uniform across the country, and the nominal component that depends on the insurer.
Yeah.
How is that? Why does that nominal element differ? What is being offered by the insurer? Are there extra quality offerings? What is driving that difference in the nominal premium?
So there are quite some differences there. So it could be the service level of the health insurer. So whether you can only approach them online with questions or with bills, or if you can phone them, or so it's the service level of the health insurer. It's the number of providers that they contract, and it's whether they I don't know the English word, but I'll try to describe it. Whether they pay, whether the provider sends the bill to them, and they just pay the full bill, or whether you have to pay the bill first to the provider yourself, and then submit a claim to the health insurer and see if that gets reimbursed fully or almost.
I see. Yep. And the difference in those administrative arrangements for payment could affect the margins of the provider, so they could therefore affect the premium.
I'm not sure if I understand if I understood that correctly.
Well, I'll leave it, but thank you.
Okay.
Those are the sorts of things that can affect the premium. For the 2/3 centrally fixed premium, would it be right to think that is in effect an actuarially determined, that is, there's a complex process of predicting the expenditures of the aged care, the National Healthcare Insurance Scheme expenditures for a given period, and the 2/3 is set on that, and then the insurance company is conducting its own actuarial estimate of the expenditures it will face based on demographics, risks, and the
Yes,
like.
that is.
And
Yeah.
they're both separately conducting that calculation. Is that how it works?
Yes. I must say, I earlier said, in an earlier meeting, I indeed said it was about 2/3 that was set. That was sort of the set national income dependent premium. It's about a half. of the total spending instead. But that's just numbers. But the idea is indeed that is set first, and then that is supposed to cover about half of the expenditures in the coming year. And then each of the health insurers subsequently, as a second step, sets their own premium and announces that. And that must, that's their choice how to set their premium, and they take into account how much they expect to spend and how much reserves they have.
Thank you.
But they set it.
Now,
they set it annually.
Thank you, annually. So, given that the financing of the system for the payment of benefits to fund home care is separated into those two tiers, this might be a difficult question to answer, but is the system, or is either of the two components of the system, run on a pay-as-you-go basis, so that in that given year the premiums are set so as to match as closely as possible the forecast expenditures of that year? Or is it intended to build up an accumulation of reserves?
No, it's pay as you go.
Yep. Both elements.
Yes.
Is that right? Yep. With the risk equalisation payments, is that centrally administered but somehow tailored to the particular risks faced by each insurer, each of the 21 insurers? How does it work?
Yeah, so there's that's centrally administered by the government, and there's it's essentially an allocation formula based on criteria of the people that are insured. So it's individual level criteria of the people that are insured through each of the health insurers.
I see. So one of those 21 insurers might happen to have a client list that's heavily weighted with older people or people who might have a particular chronic condition. Yeah. And in that case, they might receive a greater risk equalisation payment. Is that right?
Yes, in that case, they will receive a greater equalisation payment, yes.
Yep. And how are the benefit levels for, and we're still on home care, for particular forms of service, nursing, personal care, perhaps various allied health care services, determined? Are they centrally fixed or centrally determined on the basis of past cost data, benchmarking studies? How is that done?
There are maximum prices for activities. So home care is paid by the hour. And there are maximum prices for each of these activities, and these are based on costing studies. But I must say, in recent years, there has been experiment, and that covers most of the home care now, in which health insurers and providers negotiate what they call an integrated tariff. So for all types of activities, they negotiate one integrated tariff that is specific to one combination of a provider and an insurer. And that pays for most of the home care now. That is how most of the home care paid through the Health Insurance Act is financed now.
And is that simply the same for every single person in home care, or is it case mix classified in some way, so that there are people with lower needs who might attract a lower integrated tariff and people with higher needs who might attract a higher one?
It's specific to one combination of a health insurer and a provider. So the health insurer pays that tariff for each of the clients that is sent to that specific provider. And my understanding is that these health insurers and providers, they take into account the case mix of the provider when setting that integrated price that they negotiate. So that integrated price also varies a bit between providers for the same health insurer.
Thank you. And in institutional care under the Chronic Care Act, same question: how are how are the funding levels determined? Is that on the basis of past costs and costing studies and benchmarking, or is there some other process?
Yeah, so the basis of there's a basic maximum tariff, and that is based on actual costs, but with sort of that maximum tariff in the background, each of these regional offices negotiates a rate at an annually with each of the providers. So the actual amounts paid are a bit below that maximum tariff. On top of that maximum tariff, there are some others. There are some other spending that maybe that is for regions that are a bit more expensive than others, and to improve quality. So there's essentially an additional payment for that.
And when you say for regions that are a bit more expensive, is that because labour might be scarce or they're more remote?
Yes, because I believe it's more for labour market scarcity.
Yep.
Yeah.
And staying with Chronic Care Act social insurance again, is there just the one central government insurer?
Yes, there's one central social insurance fund.
Yep.
And that is administered by the government. Maybe to get back, sorry, apologies for that. To get back to the answer to your previous question about the tariffs for the nursing homes. There is, as I said before, there is some distinction between how much care someone needs in a nursing home. So someone who needs relatively little care in a nursing home, the tariffs or the prices are lower for these than for someone with dementia, for instance.
There are levels of eligibility for particular
yes, funding
or particular levels of care. Is it defined as care in hours of particular kinds, or is it defined as a
it's
budget
defined as
level?
It's defined as a package. It's defined as a sort of a package of care and support that someone receives. So there's no sort of entitlement to a certain amount of hours, but it's more sort of a range.
And is that defined in euros or in hours by relevant service types?
It's defined as so the tariffs are set in euros.
Thank you. And just going back to the point in 2015 when the change occurred and the social insurance for home care became in effect privately managed, and perhaps going back to the earlier change that you mentioned, at a certain point, was it the case that there was one social insurance scheme for both home care and institutional care? Ooh.
Sorry, I just lost the connection for a second.
Oh.
Can you hear me?
Yep. Yes,
yeah,
the connection has
okay.
been restored. Thank you, Dr. Bax.
Yeah.
So I was just asking, prior to those changes where home care became privately insured, and prior to an earlier change that you mentioned in your evidence, at some point in time, is it the case that institutional aged care or long-term care and aged care provided to people in their homes was actually administered under the same social insurance scheme?
Yes, that was the case before 2015.
And so why did that change? What was the reason for hiving off or separating the home care component and handing that over to private management?
There was a number of reasons. I think in part it was politics. One of the ideas behind behind this transition was that these regional offices, they had very little incentive for organizing the care effectively and efficiently. So organizing high quality care at a low cost. And it was thought that the health insurers, they might be provided with more incentives to do that.
Thank you. But as you said before, we still don't have an evaluation. It's only about 5 years ago, I suppose, but we don't have an evaluation yet of whether it's been a success.
That is correct, yeah.
Look, my final question, Dr. Bax, is it's a bit of a difficult one. Tell me if it's too speculative. Does the existence of the social insurance scheme in both of these spheres, chronic care for institutional and national health care for home care, confer an intangible community benefit, creating a sense that there's a social contract for sustainable provision of long-term care for older people? What's your experience of this?
Yeah, so my experience is that I of course now contribute. I've been paying premiums for this Chronic Care Act, for instance, for a number of years, and I expect that a system that will cover most of the spending, if I might need it at the end of my life, will be there. So yes, that is in that sense, it creates it creates expectations for the future to those who pay now. Yes.
Yep. And does this actually relate to what you said a little earlier about, and I quoted from your submission on people being able to have financial certainty about their future and reduces the need for large precautionary savings?
Yes, it's exactly that. Yeah.
Is it confined to that, or does it have greater benefits than that? For example, is there now, in effect, a political compact guaranteeing sustainability on into the future?
No, there's no. I mean, it's, to me, it's essentially that. But then again, I'm an economist, and that is sort of the thing that I look at when looking at these types of systems. So to me, that is the main component.
Thank you very much. I have no further questions, Commissioners.
Dr. Baxter, I just want to make sure that I've understood something you said earlier on to Mr. Gray. You described the system as essentially a pay-as-you-go, but presumably you're paying an annual amount and you're not getting anything at this stage.
Yes.
Yours is all future. So presumably what happens is that the insurance companies gather money on the basis of what they will need to meet expenditure this year, but do they not have some sense about creating a fund for future earnings? Sorry, for future payments into the future?
That's correct. There's no such fund.
That doesn't sound like what insurance companies usually do. Insurance companies usually get premiums, and they apply the premiums in part to pay amounts, but also in part to create a fund from which they make profits, and they can draw upon into the future. Is this different from the usual insurance principles, or am I just misunderstanding your answers?
No, it is indeed different. It is indeed different from what you described. So they are not gathering a fund to pay for any costs that are foreseen for 2040, for example. So the people who pay premiums in 2040, they're expected to pay the premiums that are needed in that year to fund the spending in that year.
And why do insurance companies want to get into the business?
To be honest, most of the, as far as I'm aware, all of the 21, or at least the larger ones, have been in the business for years. So they were already there before 2000, before the 2006 reform.
And presumably they're in the business in part to make profit.
They are not allowed to pay out dividends to shareholders currently.
No, but presumably they make surpluses. They presumably, yes or no?
I don't know that if they make a surplus.
I see.
I have one further question, Commissioner, if I may. Dr. Bax, with regard to the premiums that are levied, and that's done, I think you said, through the tax system, are those premiums uniform, that is uniform for people of the same income level, irrespective of age, or are they progressive with age? That is, are there higher premiums levied on people who are older?
No, the premiums are only income related.
Thank you.
If you talk about the Chronic Care Act, is that correct?
Both the Chronic Care Act and the National Health Insurance Act.
Yeah, so in both cases, it's not age related. So in the National Health Insurance Act, as we discussed before, there's the two types of premiums.
Yes.
One is income related and the other not. But yes, the income related one is only related to income and not to age.
Thank you. And a further question, does that simply apply to all taxpayers above the age of adulthood? Is that 18?
Yes, it does.
Yeah. Okay. Thank you.
Well, I suppose related to that, one of the issues that sometimes gets mentioned here is that there may be an intergenerational issue about you contributing now, although you're not likely to be getting any benefit for some time. Is that something that's of concern at all in your country?
It is, yes. So of course, if health expenditures grow, and in particular if aged care expenditures grow, there's more intergenerational redistribution, and it might be the case that in the future there's not sufficient there aren't sufficient number of young people to pay for all the aged care costs of the elderly. That is indeed a risk.
And are there projections about the likelihood of that happening and how to mitigate that risk?
Aged care expenditures in the Netherlands are expected to rise quite drastically in the future, but it's really hard to keep healthcare expenditures in check. I think in both the health insurance, social health insurance, and in the Chronic Care Act, there are budget caps, overall budget caps that are set by the government, for example, in response to this. And there's also other initiatives going on to keep spending low and spending growth low, mostly.
Good. Thank you, Professor. No further questions?
No further questions.
Professor, thank you very much for making yourself available. It's always difficult to have these links from what might be almost exactly halfway around the world, and we're very grateful that you made yourself available. You have the distinction of being the last witness in these hearings, and thank you very much for being available. It's been very helpful.
Yes, sure.
There's no summons.
There's no summons. Thank you.
Thank you, Dr. Bax.
Yes.
Thank you. That concludes the hearing from our perspective. Thank you, Commissioners.
All right. Thank you, Mr. Gray. Well, we'll obviously consider the submissions that you've made to us, and no doubt the ones that will be coming in the weeks that follow, and together with those that others make in response to the directions that we've made about submissions. We should take this opportunity to thank not only you and the other members of the council team, instructing solicitors, and the large, I should say large, but the number of people behind the scenes who are less visible and whose work is really very, very valuable, and we thank them also. We need also to thank a number of other people, our hosts in the premises here in Sydney. It's been wonderful to be able to use this room with the computer equipment that we've had. It's made things a lot easier than if we'd all been tucked away in our living rooms at home or in chambers trying to conduct what is an important inquiry into aged care for the country with very depleted resources. There are, of course, also the IT team whose work behind the scenes is wonderful. We've had only a few breaks, and they've managed to deal with them very efficiently and quickly. So thanks to them. Without their work, we would not have had the connections that we have had, and that's been really wonderful. And lots of other staff, including security staff, that are less visible and they often get forgotten, but without them, a lot of things couldn't happen. So our great thanks to all of them for allowing all of those things to happen. I think we'll now adjourn until
A date to be fixed.
date to be fixed, I suppose. Best way of putting it, yep.
The Royal Commission is now adjourned.